That's more than the 2021 meme stock frenzy and even the bear market dip by.
Buenos días, bienvenidos. ¿Cómo están? Estamos aquí en la sesión de bolsa, estamos empezando para la situación. Pero en realidad que hay mucho movimiento. Lunes, hay mucho que hacer, entonces está movido el día. Sí, ya está, tenemos que poner ahí. Ustedes, nos subimos aquí, de $8, una locura, y subimos a envío también, aunque ya está bajando, claro, pero ya por acá, está poco rendimiento. Goldman Sachs también está sufriendo. Bitmain tocó 92, un mínimo ya iba en 107, poco a poco, ¿no? Tengo mucha talacha administrativa, tengo que no mucho, Tesla ya de 24 hasta allá, que porque a Elon ya le autorizaron su partido político. Bueno, tenemos que hacer
Market.
All right. Christina, thank you for that great setup. That's Christina Partsenevelos, the mother of all retail stocks, Tesla. Christina was referencing that's now 7% today. Now you have the political party from Musk, and you have this feud again picking up with President Trump. Highly entertaining to some, no doubt. Highly concerning to some Tesla shareholders. That has to be clear at this point. Speaking of, Bryn Talkington joins us now. She is a Tesla shareholder, longtime supporter of the stock and of Elon Musk. And just when you thought you were out, they pull you back in. So what are you thinking now, Bryn?
No, it's like I'm actually surprised that people are surprised about this, because whether it's buying Twitter, going all in on President Trump's election, going scorched earth on President Trump, there's a great adage, Scott, that when people show you who they are, believe them. And Elon's going to continue to do what he wants to do. Now, as it relates to this new party, the American Party, from what I understand, he's going to be supporting, various, representatives, congressmen, et cetera, that have his views around fiscal conservatism, et cetera. So at this point, I don't think he's going to be spending that much money, being that we just passed this massive bill. So I think today it's a little bit of an overreaction, but I do think there's fatigue setting in, though. But I think when you have someone that runs 6 companies, very successful, has a great team underneath it, I just think I think today is a little bit of an overreaction, but I do agree it does get a bit frustrating.
William Blair tries to put some numbers around the whole thing, obviously looking at the passage of the bill and what it's going to mean, because of the EV credit, which is, in many respects, the match that lit this whole thing. While the $7,500 tax credit is likely to affect demand, the combination of a demand headwind and over $2 billion in profits from regulatory credits at risk may be too much for investors to bear. What about that investor, you, Bryn? These are real numbers behind what is ailing the stock activity today, at least in part.
Well, I think on the tax credit, obviously the tax credit of I think it was $2.4 billion last year that they get from the carbon credits. But in terms of the consumer credit of $7,500, what I'm thinking of, and I haven't done the math yet, but I think it may net out, because these cars are made in America, interest for earners at $100,000 and then join at $200,000. If you make a car in America, you're going to get to deduct that interest. So I do think that's going to be somewhat of an offset. And I think with high rates, for people that want to own a Tesla, you're losing the $7,500, but you're going to get that deductibility of interest. So we'll see how that fleshes out. But as I've said many times, Scott, the current fundamentals of the current business are deteriorating. And so I think you want to own this name, and I really try to look at it pragmatically. You want to own this name and sell calls against it. So, towards the end of the close, I'm going to be adding to the position, but I'm going to sell the September 320 calls, which is only about 8 weeks out, 9 weeks out, and I'm going to collect $20. So if it gets called away, I make 16%. If it doesn't, I've earned 7%, or I've reduced my cost basis on this new position by $20. And so I still think this 250, 260 to 350 is where we're going to trade. And so I think if I'm going to enter in a new position, I definitely want to sell calls on it right now, since we're not down at that 250, 260 yet.
All right. Interesting to get your perspective and certainly hear about this new trade. Bryn, thank you. Bryn Talkington joining us on Tesla. Speaking of, and maybe it's no coincidence here, Joe, Uber hit a fresh all-time high today. The target goes to 120 from 100. Reiterated overweight at Wells. Let's take a look at that stock. There it is. Oh, we were just looking at it. Let's throw it back.
Keep that chart up.
We don't need to see that. Let's look at the chart.
That's a good
there
looking
you go.
chart.
That
is a good looking chart, and that chart is going to continue to move higher. This is a company that I think will have a market cap that can double, maybe triple over the next 5 years, clearly. They've done such a remarkable job in just cleaning up the balance sheet, making them a profitable company, and the diversification of the business model has been one of the reasons why. 52-week high, all-time high today for sure. The stock, in my opinion, and its ability to reward the shareholders is also going to attract more of an investor class that previously was going to invest in names like Tesla. There's less volatility. There's less agita, as we say, than being involved in Tesla. So
who's we?
I think maybe.
You? Okay.
Yeah, for sure.
All right.
I think this is a stock that is undervalued. I think it's a stock that's going to move significantly higher.
Okay.
You know, I have a question on that, if I could.
Yeah.
Please.
You know, we saw...
Proceed.
Thank you. We saw Uber trade down, not significantly, but trade down as the market was trading up in advance of the robo-taxi announcement.
Don't you still... You own Uber, don't you? Oh, you don't own Uber?
I don't own Uber. I have a very small position. It's not even worth talking about. It's like I'm out of it completely. I sold most of it, like 90% of it. But my question for you is this. Then we saw the stock have this huge move up, one after the robo-taxi. Now, do you think that could be caused by one of two things? It could be caused by that Uber shareholders now and those that sold it don't really fear the robo-taxi, right? Because Uber's got a much more profitable model on that. Or it could be that the Tesla announcement talked about a much larger market people have expanded on, you know, and then they had it anticipated. I think it's the former, not the latter, because the economics of having the drivers and everybody else, but Uber are much better. What do you think?
I agree with you on that. I also think what the street sees is that they're not worried about the technology of Tesla because there's a response there with the relationship they have with Waymo.
Exactly.
I think that people really don't understand how far the technological advantage is for Waymo. Waymo,
without a doubt.
Waymo has been phenomenal in what they have done in autonomous driving. And now, for Uber to have that affiliation with them, why do I need to worry about what Tesla is?
Let me just finish.
Hurry up.
So let me just follow this through to Tesla.
Get the Admiral
so
in
we've
here.
taken the robo-taxi.
O sea que mientras siga me sigue cargando, Uber sigue subiendo. Interesante. Estamos en 53. Ok. Ven acá.
The risk a little bit, selling this Friday, buying next Friday, and looking at the 280 strike, looking to spend $3 on this particular trade. And if you do that, you limit your risk to $300. And of course, you would be benefiting from a move lower in Tesla shares to around 280. Now, it can overshoot. This is customizable. But I wanted to structure a trade that kind of gets down to the next potential levels of support on the chart. This stock ran into some volatility a few weeks ago on similar news, and 280, kind of 275 to 285, it kind of started to get a bid. Do you think that same level could hold again? It's not a huge move from here.
Right.
Perhaps that could make sense for a place for it to run out of gas to the downside, at least short term, and then this one maybe expands from $3 to something greater.
Yep, let's break this one down. Really short-term positioning, going out to that July 18th monthly options that expires in 11 days, buying the 280 put, selling that same put in the near-term July 11th weekly options that expire in just 4 days. 1 week wide put calendar here. You're paying roughly about a $3 debit, probably trading closer to $3.10, $3.20 right now. But the debit you pay is going to be the risk, as Alex mentioned. But you look at this risk profile, and it kind of gives you an indication. Yeah, you want it to go at or near 280, but you've got a good wide range between maybe 295 on the upside and maybe 267 on the downside, where you can still be potentially profitable on this type of trade. Kev, give me your assessment here. Really short-term positioning, but it gives you exposure to the downside.
IV percentile still right at the 25 percentile, which means the bottom fourth in terms of implied volatility. So Alex
cuando
doing a very
llegue, no la quería ver
short-term
en
bearish
otros
play over
$1,000,
6
cuando
deltas,
llegue la
but Tom, it's got about 8 Vega. So if Tesla's implied volatility were to pick up over the next, 3 to 11 days, this is going to look okay. It's going to get the directional play of short deltas plus the Vega play of higher implied volatility. So it's collecting, theoretically about $32, $33 a day, and you're just looking for a move, like Alex said, following the momentum down towards 280 is his play here.
Yep, and you've got some assignment risk on that short option over the next 4 days. And time decay is in your favor on this one because as you get closer to expiration over the next 4 days, that's the price of the put that you sold contracts at a faster pace than the one that you bought a week out. So really short-term positioning gives you some exposure to the downside. You just don't want maybe a 2 or 3 standard deviation move to the downside. And you don't want the stock to go higher either. Just grind lower towards that 280 strike within the calendar. All right, that is going to wrap up this block. Let's take another quick break. Thanks to Alex Coffey, Senior Equity Contributor. But coming up next, we're going to be joined by Andy Swan from Likefolio for a look at sentiment data in Netflix. The streaming stock is lower after downgrade, but is still just below those record highs that we hit just last week. Stick around.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Donald Trump dice que cargará Japón en tarifas el 1 de agosto. Ok, entonces tenemos tal vez un mes más de todo el... Porque esta semana se iban a hacer los cambios de los portafolios para...
What's up, Carl
para
Nation? It's your number one broker with the best full service wealth management skills in the biz.
Anunciaron los aranceles. Entonces otra vez iba a volver esta calculadora. Se desconectó mi terminal. Iba otra vez. ¿Qué pasó? A ver, parece que ya. Sí, parece que ya. Se apagan las pantallas y vuelven a encender. Entonces, a ver, aquí. Bien. No, pero no es bien. Sí, claro. Ok, encendió la pantalla, tarde. Ok.
Yeah, happy Monday.
All right, so, Netflix got downgraded today.
Business. They're economically unsustainable for either party. So they have to, at some point, be relaxed back. The same thing happened May 9th in Geneva with the Chinese.
Yep.
Jimmy, you have a
These
thought?
letters are a cattle prod. That's all it is, and the market sees through it. Of course, it goes down on this news. I think it's going to adjust on the way back up pretty quickly. This is looked at as a negotiating tactic.
This is Yellowstone Jimmy today.
It is Yellowstone Jimmy today, and I'm enjoying it.
Yeah.
Going back to my youth at a ranch camp.
All right, so let's take a quick break. We'll keep our eyes out for any more headlines that come out from the White House because the letters were said to, start going out at noon Eastern time today. So maybe this is just the first of many salvos coming from the White House on the trade front. We'll watch all of it. Dow's down 470 plus. Calls of the day next.
My job is about selling sustainable aviation fuel, which is known as SAF, to the aviation sector.
Aviation is under strong pressure, is under to reduce its CO2 emission.
SAF incorporates biogenic waste coming from used cooking oil or animal fat.
Footing. The other chart that I really think from Likefellow that's very instructive here is, app engagement, again, down 10% year over year. Sentiment around Netflix originals is falling pretty fast. We really just think that the core user, the core excitement for Netflix is slipping away a little bit. There's really not much buzz. There's no breakout content, no must-see content, must-share content. And, unfortunately, no real visible innovation in sight. And I think it really comes down to sports. Disney Plus has Wimbledon, Amazon's getting NBA rights, and YouTube is dominating Gen Z with creator content. You just kind of Netflix there, kind of sitting on, resting on its laurels a little bit. So I think, this is a great company that has shown the ability to execute really, really well. And, lulls like this have historically been opportunities, and I think that's probably the case right now, but they definitely have a lot of weakness to sift through, and a lot of headwinds to get through here, especially from the consumer perspective.
Andy, I have a page full of notes and questions that I could talk to you about when it comes to Netflix. But one of your charts, the streaming trend chart, really jumped out at me, because we talk all the time about Netflix being the leader in streaming. And then I see your breakdown of streaming, and you look at YouTube, and it's really lapping the field, and it's almost lapping Netflix. I mean, 12.5% of all streaming versus 7.5% for Netflix. What is your data? What is that data saying? Most Google Alphabet traders and people that are watching this name, YouTube's almost an afterthought. It's something we throw in after cloud and search and all these other great companies that Google has. Very quietly, Andy, they're dominating streaming, aren't they?
Yeah, and streaming's dominating the landscape, I think, is the other big takeaway there. Streaming is now officially surpassing both cable and broadcast television. And so I kind of think of it as this kind of waterfall effect, where it used to be that the only people capable of creating truly great content were networks and some cable providers that had the means and the resources and the distribution to get that done. And then it shifted, and the digital players came along, and Netflix dominated that because, again, they had a great amount of resources. It took less for them to distribute, so they were more profitable. And now this kind of third level of that waterfall is the, independent one man, one woman creator. And they're on YouTube, they're on TikTok, they're on X, they're on Instagram, and they're creating really great stuff, really compelling stuff, to the point where, the guy that was I forget his name, but the guy that was in the outdoor YouTube channel and created great content for families about being an outdoorsman. When he decided to step away, the world mourned. And, it's different than a Netflix. You feel that personal connection with a lot of these people. And I think that does create extreme engagement across thousands, if not millions, of niches. And so that's what Netflix is up against. They're up against millions and millions of creators that are creating very specific, very unique content in an experimental way. And the best ones of those are winning user engagement, whereas Netflix is trying to, create the next big series that everybody's going to love. It's a very difficult game. So YouTube definitely in the driver's seat as far as, content creation, and eventually something on their platform's going to hit a bullseye, and it happens every day.
Yeah, Andy, Kevin mentioned the one graphic that you guys had about streaming trends with YouTube outperforming, but then your other two, that kind of surprised me. The app usage down 10% year over year, and then the gap between, web visits versus their stock price is probably the widest I've ever seen it. And you guys are typically, relatively bullish on this name. I mean, when you look at those, is that a trend, or is that seasonality, or is it something that can flip relatively quickly if they have a couple new hits? Or is this just maybe a trend that is just beginning?
Well, we have to kind of wait and see on that. Yeah. There's been many times where we've had the opportunity to declare the top on Netflix from an engagement standpoint, from a stock price standpoint, from a just corporate standpoint. And all of those have turned out to be dips. And I think that it's most likely that this turns out to be a dip as well, because historically, this is a company that executes extraordinarily well, that innovates a little slower than everybody else now, than the YouTube creators by the millions, but innovates really well, and tends to find the customer where they're at. And so we're going to continue to bet on that team, that history, and that ability to execute and distribute, but with the caveat that this time might be different. We won't know for 6 months, 8 months, because that's the general cycle, where Netflix comes out with new content. But we could be sitting here in December or January talking about the new runaway hit or the new sports league that Netflix has created and totally changed the landscape. Neither one would surprise me. I think right now we just say, let's sit back, watch, let's see what Netflix does, and use the opportunity on serious down moves to pick up some shares to add to our position, because we're certainly not giving up on this company yet because of a little bit of a lull in the data.
Yep, and those valuations elevated also on a forward and trailing basis. All right, great stuff as always, Andy. Have a good day.
Thank you, you too.
All right, that's Andy Swan, co-founder of Likefolio, breaking down for us. Kevin, I think that was, maybe the least optimistic data that we've ever gotten from Likefolio, but at the same time, you can't bash against what the stock's done. Andy mentioned up 44% so far this year, up 86% from year-ago level. So it's still been on a run. How do you want to look at this? Because they report earnings next week.
Right, and there's one of the questions on how you want to approach it. That's why I brought two trades today, Tom. And so if you look to the July 17th earnings event, and therefore look at the July 18th earnings or series, right? In terms of expiration, you can look at the $104 expected move. Go inside that, Tom. I sold the $1,211.90 put vertical, Tom. So $88 now? $88 lower out to next week, because there's an elevated level of implied volatility. Now, maybe you want to stay away from that, right? And give yourself more risk. So, Tom, I looked at that as trading around $2.50. Why? Implied volatility is elevated, right? And you're slightly inside the expected move at that round number 1,200. But if you go out another week to the July 25th, you can go down another $15 to the 1185, 1175 and collect almost 240. I've got it in there at 230, but it's trading almost 240, Tom. So this is how you judge risk and make decisions. Do you do a short put vertical into the earnings event that right now the implied volatility is elevated and possibly going higher? Or do you go further out, give yourself more of an expected move, another $15, but you also give yourself more time, Tom? There's the discussion trade-off that we want to have today.
All right, yeah, let's break down. The first one we're going to look at is that earnings event cycle, the July 18th that Kevin mentioned here. We're going to sell the 1,200 strike put, buy the 1190 strike put. So a short $10 wide, neutral to bullish put vertical that you're going to collect roughly about 250 credit on it. It's trading right around there right now, but if you collect that 250 credit, it takes your break even all the way down to $1,197.50 on that one. So you do have that big cushion to the downside on this one. Kevin mentioned selling a put vertical on the 1,200 strike. That's $88 out of the money. means that that 1200 strike has got about a 74% probability of finishing out of the money in a higher implied volatility option series because it captures that earnings event on the 17th on next Thursday after the close. So take that into consideration. But on that trade, if you collect 250 credit, your risk is $750, but that's all the way below 1190. So basically $100 below the current share price in there on that. Break even, as I mentioned, 1197.50 on the nearer term one that expires in 11 days. Now let's flip it and look at, not flip it, but same type of spread here, but this is out in the July 25th weekly cycle that expires in 18 days, giving yourself an extra week of duration, right? And Kevin went further out of the money to the downside, selling the July 25th weekly options, the 1185 strike put, buying the 1175 strike put, collecting roughly about a 230 credit on that one. So you're collecting just a little bit less than the other one on that trade, but it takes your break even down to 1182.70. So you've given yourself a bigger cushion to the downside. And why is that? Well, you've given yourself 7 days extra in that position where the stock could actually go lower than that. The 1185 strike, the probability of finishing out of the money is nearly 76% on that one. But positive time decay on both of those examples. But it's a good look at what you can collect versus duration versus the cushion that you give yourself on these positions. Now, on the second one, if you collect that 230 credit, you got $770 in risk. As I mentioned, that 1182.70 break even to the downside on that one. Kev, real quick before I let you go, these are the things that you start looking at when you're looking at duration, what your outlook is for a stock, what kind of probabilities, right, versus what you can collect on those.
Yeah, you always worry about selling volatility while it's going up into the earnings event. But if this stock were to move higher too, you know, the overall value will go down. So it's always something worth watching and learning from is when's the right time to put on the trade, right? And so it has a lot to do with your opinion on the trade. So it's always a good exercise time to go through this and see when do you do it. Do you do it based on the price of the stock, or do you time it right in front of the earnings event? Always a fascinating discussion.
Yeah, and one of the things is volatility in that July 18th option series on the first example that we looked at on the 1200, 1190 put vertical. That should stay firm, volatility, but at the same time, as you get closer to expiration, time decay is contracting the price of that, so you probably won't collect as much if the stock's staying right around here and vol levels are about the same. So keep that in mind also. So good look at two different ways to trade Netflix with those two examples. All right, coming up after the break, we're going to take a look at Applied Materials. The semiconductor equipment stock is up about 17% so far this year, but was downgraded today. Coming right back.
Vean, de ayer 90, casi ya estamos por 95%. Entonces conviene mejor short swap. van a estar averiguando primero o 2 horas.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Welcome back to Fast Market here on the Schwab Network. Before we take a look at Applied Materials, let's get a quick market update here because stocks are near session lows after those headlines from Truth Social came out where President Trump sent letters to Japan and South Korea saying you got to pay 25% tariffs starting August 1st. That put a little bit of a bigger dent in equities, which were already in the red from those all-time highs that we had last Thursday. So headline risks, once again, rear their ugly head here for equity markets with all four major indices deep in the red, led by the small caps. All right, let's get into a discussion. There's a heat map there, kind of reflective of a lot of red out there. All 11 of the S&P 500 sectors in the red in today's session, led by consumer discretionary to the downside, but small caps getting hit here also. All right, let's get into a discussion about Applied Materials. The stock was downgraded today from Redburn. They put a price target on 200 from 225. But then on the flip side, Citi raised their firm's price target on Applied Materials to 220 from 190. Keeps a buy rating. And they've added it to its U.S. focus list. That's why the stock's relatively flat after a downgrade. Let's bring in George Tillis, senior markets correspondent here. George, it seems like a battle of the analysts on this one, but stock's up 17%, but still in bear market territory from those all-time highs last August.
Yeah, if you do look at the stock price action, like you said, it was trading around $240, $250 going back to last year's August level. It's actually been down in the last year about 22%. Year to date, it's starting to inch higher, particularly off the March, April lows that we saw in the overall markets. But, I think the price action today is a little bit telling, particularly because it's not moving down in sympathy with the SOX index. It's underperforming, or it's better performing than to the downside, let's put it that way, than the SOX index. But nonetheless, I think if you look at the analysts, it's like splitting hairs here with Citigroup, like you said, moving their price target higher to 220 from 190. They maintain a buy rating. And then Redburn, Rothschild actually downgraded the stock to a hold from buy or neutral, and they brought their target down to 200 from 225. And there's a couple of things that I find interesting about Applied Materials that I think might create some clarity here. But I did notice that last year, if you look at sales growth was close to 7% for the last sequential 4 quarters together. But if you look at their capital expenditure growth in the last 4 quarters, it was up 52%. So I think that suggests why perhaps the stock was down. Now, the company has done some things to ameliorate some of that CapEx that was quite high in the past year, and that was to buy back shares. That may have supported the stock price to the best degree possible, but they're running out of capital, I suggest, or cash to potentially continue the share buyback program that they have put in place. This year, they're still expecting about $10 billion in share buybacks, but they've got about $6.7 billion in cash left on the book. So I think what's happening here is the expectations for the company are to lower their CapEx, maybe in the next couple of quarters, save some money and use that to continue their share buyback program. But I do think at the same time, if you look at the earnings growth estimates for the fiscal 4 quarters going forward, they are still expecting essentially around 19% earnings growth. So that's still pretty good. And I think that a couple of areas of weakness that we've seen in the stock represent their markets. One, 25% of sales are in China. And we know that China is really encroaching on the semiconductor stack, whether it's competing from a equipment standpoint, technology standpoint with Huawei, and of course, trying to develop their own CPU and DRAM chip technologies as well. Applied Materials is one of the larger, if not the larger, player in the DRAM and NAND flash memory equipment manufacturers. The other thing is the capital expenditures last year have a lot to do with the secular trends in AI and data centers. So they've had to spend to essentially broaden out their equipment offerings to multiple semiconductor companies, perhaps even NVIDIA going forward, but it's cost them money. And I think that's really reflective of what we've seen the price action in the last year, because it's significantly underperformed the markets and even really underperformed the SOX index. So there's something telling with the semiconductor equipment manufacturers, because they typically provide some leading indications of the CapEx cycle. And I think that's maybe played out here and why Citigroup is upgrading the stock. But at the same time, Redbird, I think, is a little bit more cautious, perhaps, on the ongoing tariff issues and ongoing geopolitical issues in China, because, like I said, AMAT's exposure in China is still quite large, around 25% of total sales.
George, when you look at a company like Applied Materials, they're in the semiconductor, they're involved in the megatrends, they should be benefiting from it, but they're not as sexy as some of these AI chip companies, right? They're more, they're more of a recurring revenue. They're more of a stable cash flow because they make the equipment that makes the semiconductors. So they're in this business that they should benefit from, but they're not exactly the same, are they?
They're not, and that's the thing. I mean, the sensitivity I suggest in the semiconductor area is really dealing with inventory gluts. That doesn't seem to be the most concentrated, best case scenario for the equipment manufacturers, but they do typically lead the semiconductor cycle. I mean, if you notice Micron, for instance, AMD, both these stocks have really picked up this particular year, but even AMD and Micron are still down over the last few years because of inventory gluts, pricing erosion, and then changes in technology. I think Applied Materials, when you look at this stock or consider it, you have to consider that it's a low growth, stable cash flow producing participant in the semiconductor vertical. The other thing is the display markets, whether it's smartphones or TV display markets or adjacent display markets, they've been relatively weak, handsets and so forth. I think that's weighed on Applied Materials. And I also think that, it seems to me that they're evolving in what their offerings are, but that has cost them quite a bit of money, because when I looked at the sales growth for the last year, 7%, that's still down relative to 5-year averages. So revenue was already down in the last year relative to the 5-year average. But at the same time, earnings contracted quite a bit in the last year because of the heavy CapEx demands that have been placed on the business. They have offset, like I said, with their share buybacks, but it looks like to me, this is my evaluation, that in the next couple of quarters, they're probably going to demonstrate some capital effectiveness in terms of what they're spending to let the last couple of quarters of spending manifest into the forward a couple of quarters. And maybe we'll see a continuation of this trend, which, albeit, again, it's not the most sexiest or fantastic looking trend, but albeit it's been moving slowly to the upside on very low volume.
Yeah.
But nonetheless, if they come out next quarter when they report earnings or the upcoming quarter, they may demonstrate that they're cutting back on their CapEx, and that might actually be rewarded by institutional shareholders as well as analysts.
All right, great breakdown for us. Appreciate it. That's George Tilla, Senior Markets Correspondent here, breaking down AMAT. Battle of the analysts on this one. So I looked at a strategy here, Kev, that's relatively neutral. It's short iron condor. We sometimes call it a short iron butterfly, with the expectation we're going to see some consolidation in the shares. It went out to the July 25th weekly options that expire in 18 days. We're going to sell the 190 strike call and the 190 strike put. So we're selling that straddle at the money, where stock's currently trading about 190. And then against that, to make it risk defined, we're going to buy the 175 strike put and buy the 205 strike call. So short $15 wide wings on this short iron butterfly, collecting roughly about a $9 credit on it. That's what you can make, $900 with $600 in risks. That's below 175 or above 205, which is where your risk is. But Kev, you got break evens about 199 on the upside, 181 on the downside. So you definitely need some consolidation on this one.
The simple theory about selling options is, in most cases, like this one, you want it to go to the short strike. And so any trade that hovers or stays around the 190 level is profitable for you. You are selling the 190 straddle, collecting that credit, and then hedging it by buying the 205 and the 175. 205 call, 175 put. Collecting about $9, you're looking for it to stay in that range and buy it back for as cheap as possible.
Yep, and you'll have some assignment risk on that. Those you might need to close that early if the market's open. Keep that in mind also. All right, that's going to wrap it up for us today here on Fast Market. Stick around, though, right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors, named highest in...
Pero está pasando nada importante, así que eso sí tenemos, miren, este monstruo ya más del 100%, ya era la terapéutica, era Pesos terapéuticos ya se acabó y ahorita estamos con este monstruo. No está nada de tocar los $1,000. Más del 100% de inversión. Hermoso, 10 de 10. Bellísimo. Jal, ya. Claro, por que si llega a los 10 ya con eso.
Welcome to Next Gen Investing. I'm Jenny Horn, joined as always by Alex Coffey. And Alex, as we do kick off this trading week, we are looking at some Weakness today. I mean, as we did get some positive developments, especially following some of these tariff announcements on South Korea and Japan over the weekend, but also some degree of I'd say optimism expressed after we saw that big, beautiful bill signed. But now the latest economic and overall, I'd say just political risks still trickling into this market as we're lower today pretty substantially in the Russell. Also weakness in the Dow. About 0.9% lower in the S&Ps, and NASDAQ down about 0.8%. So this is the steepest day of selling we've seen now in several sessions.
Oh, yeah, definitely. We'll see if it holds. The opening bell on Morning Trade Live, I talked about this being kind of a week where you're going to be sitting around waiting for headlines, as headlines are going to drive the action. So far, that's rang true. We got some headlines on the tariff front from the president in the last hour or so, which did see the market take this leg lower that we're experiencing right now. It's trying to stabilize, trying to stage a bit of a recovery, but very much right now at the cause and the effect of whatever the latest is when it comes to tariffs and other, I guess, headline-related items. But right now it does seem the trade policy is front and center.
It definitely does feel like that, especially as we are still in a very earnings light period. I know we have about a week or so, about 2 weeks before we get that next leg of major bank earnings. So we will be anxiously awaiting those, as banks will definitely set the tone for the rest of the second quarter. But as far as economic developments, still a lot to watch from headlines right now. As we keep saying, it's a very headline-driven market as it stands. So we'll dive through some of those headlines on our show throughout the next hour. As of course, we'll kick things off with some of these movers to keep on your radar. We'll also be charting two autofocus names with very different price performance today, Uber as well as Tesla. Two very different stories, but very different charts that will compare and contrast. We'll also be looking at Nvidia, which today now is lower by about 0.75%, as well as discussing the latest with TikTok, as it has been a while since we've been able to discuss anything positive, really, as far as developments regarding the social media app and its ownership hopefully coming here to the U.S. We'll also be looking at Prime Days, of course, as we kick off Prime Days tomorrow. And last but not least, Core Scientific being purchased by CoreWeave, and both names are lower after we did hear some confirmation from both of those companies. So a wide variety, as always, to get through on the show, and we have a very equity-specific focus as we kick things off, not really a theme for our top movers.
Yeah, very stock-heavy show, as always, tons and tons to get through. If there are updates on the macro front, we'll be sure to bring them, but right now it does seem to be a bit of a lull. Let's get to some of our movers here for this first segment, starting with Netflix. Kind of a downbeat note from Seaport, but when you listen to them, kind of makes sense.
It does kind of make sense. So to dive into some of this note, Seaport Research downgraded shares to neutral from buy, did not give a price target. Neutral, though, not saying, head for the hills by any means, but they did cite valuation and the time needed to execute against expectations behind this downgrade. They now see less than 10% of upside for shares at their current levels and said there is plenty of long-term opportunity factored into shares at their current price. They did note that Netflix needs time to execute against the expectations in advertising, aggregating, and launching experiences, as well as expanding their overall share gain. So they definitely do fall more in the minority camp as a neutral rating, because there is still a ton of optimism in this name. But mentioning the valuation, so of the 50 analysts, there right now are 14 holds, and then you see 26 buys. But valuation forward PE right now is 48 times. So yes, it is, historically speaking, even expensive.
Yeah, and I think the big thing to me was that this highlights something we talk about a lot, which is stocks can correct in two ways, or a combination of the two. But it's really, they can correct in price or they correct in time. And the argument that this analyst making is more of like, hey, you've priced a lot of the future in already. Time now needs to pass, and they have to live up to that hype and those expectations. And then at that point, maybe this becomes more attractive down the line. Basically saying, what else is there to price in at this level? We only see 10% higher in upside, Seaport that is. And so when you're looking at it from that perspective, it's not necessarily a bearish note. It's just saying, hey, there's maybe better opportunities elsewhere.
Yeah, and I think that's understandable, because right now we've seen Netflix, reach pretty strong levels, as we've seen the rest of tech really be a huge part of this recent overall market recovery, which also fits the bill for our next name here, which is AMD. Citi actually raising its price target, though, to 145 from 120, also with a neutral rating as part of this broad second quarter earnings preview for the semiconductor group as a whole. Now, they do see increased estimates saying that prior assumptions that tariffs would drive to a slowdown in the sector does not appear to be coming to fruition. They expect a sector upturn driven by this solid demand and inventory replenishment, but they see the most upside, notably in microchip and Texas Instruments, not so much AMD. AMD down 2% today, and while we have seen a recovery in shares, I mean, we're off of lows here by 76.5%. We're still off highs in this name by about 28%, and we do remain down about 21% on a 12-month basis now.
Yeah, we talked about the disappointment surrounding this particular company. I don't know how many times, but it's a lot. And you start looking at how far they've fallen behind some of their key peers in the industry. It's disappointing. I've talked about it a lot. When you look at it over the last so many years, it's underperformance. Now it's starting to improve again as time goes by. But you go back. Let's just go back in time here a little bit. You can go back to the end of 2021, and this stock was trading at 150, 165. Well, right now it's 135. So in what's been one of the biggest booms for semiconductors, maybe since .com or maybe ever, one of the key players in terms of growth in this space has had its stock price go down by 10%. To me, that's unacceptable.
Yeah, I mean, to me, it's yet to really prove that it is a competitor in the AI, hype cycle. We have not seen it really play out. Even the announcements of some of its latest, products, it really failed to enthuse, as it does have these various days where it unveiled the latest series of its M100 chips. It doesn't seem to actually come to play for price, at least to the upside. Our next name today, though, is Chipotle. A very different story for Chipotle here, as it's not obviously as tech-centric as our other two names, but down today the most substantially of the group, about 3.4% after BWG Global downgraded shares to mixed from positive. And right now they are highlighting the fact that this is a name that has seen, again, some increased upside here, as we have just seen perhaps valuation play out as optimistically, at least for the time being, as they would expect. But Chipotle has traded in a way that has not felt typical. It's because they've seen relatively difficult comps on a year-over-year basis. There is still a lot of conviction, I will say, to the upside. So there are right now 25 buys and 10 holds and no sells in this name or underperforms. But again, carrying right now a PE of 44 times. I mean, this name has also become relatively stretched for the lack of growth catalysts that many see, at least for the foreseeable future.
Also, an example, a good example, I'm glad we have an example, that, stock splits, price didn't go up. It basically has never been as high as it was since splitting its stock back in June of 2024, so about a year ago at this point now. It was around, split adjusted, let's call it the mid-60s. It did test those levels in sort of the mid-December timeframe post-election, but selling off in the first quarter, trying to recover, but doing quite a bit of technical damage today, falling below its 1 week EMA, taking out almost a week's worth of price action just in today's move alone. So maybe one to watch, but to your point, elevated valuation, not elevated stock price, and one that, hey, buying the split just didn't work.
Buying the split did not work, unfortunately, as that's a strategy many have tried, I know, with some of these stock splits. And to close things out here, we'll look at a name that's seeing at least some optimism on the session. That is Wynn, which is just now about 0.2% off a 52-week high. Important to note, though, this is not a 3-year or an all-time high, as this name has traded with some volatility, really, since we've seen the situation develop in Macau. We got some positive news last week regarding some really strong trends from Macau specifically. Goldman today, though, with initiation of coverage with a buy $122 price target, saying that the company has best-in-class Las Vegas assets with a resilient consumer base and lots of tailwinds for 2026. They also said their Las Vegas assets are less cyclical than it might seem at first glance, given the company's high-end consumer demographic. It's also diversification away from gaming and significant reinvestment into its properties. So more of that U.S. exposure, actually, they see as favorable for this name. As we always joke, some of the most, I'd say, like ill-named companies are like Las Vegas Sands, which is really primarily now outside of the U.S. And Wynn, they actually see some of their Las Vegas specific operations being now some upside for Wynn shares.
Yeah, Wynn's in an interesting spot, right? Because when you look at its position in Vegas, I think few would argue that this is perceived as probably the top resort location in Vegas, in a time where Vegas has become more than just gambling. It's the experiences, it's the club and restaurant space, it's the niceness of the rooms. They're well positioned to succeed, but they're going to need cyclicals to hang in there, as it is still a very, very sensitive space to the economy.
That is true. And so definitely still sensitive to some of the trade turbulence that we still are seeing unfold. But we'll leave it there for the top of our show today. Coming up next, it's time to look at the technicals in two auto-focused names. We'll be looking at Uber, which is now about 1% off of its all-time highs, as well as Tesla, which is taking it on the chin a bit today, down about 7% and some change.
Patrón, 32 de RAM, y 7 de sistema y no. O sea, corre mejor que la otra configuración. Y aquí la partida se acabó. No sé. Le pego bien. Es esta. Sigue subiendo, ¿no? Sigue subiendo. Del 1.21 al 2. 80 centavos, como 13, 14 pesos mexicanos. Okay. Pues es lunes, no desesperen, está aquí un buen día, pero todo con paciencia y con médico.
Treasury yield is an important barometer.
You're still buyers of fixed income, though, maybe on the corporate side or what have you. Jack, appreciate it. Thanks for joining us today.
Thank you.
Talk through all this. Jack Ablin with Crescent Capital. The president now also threatening to slap an additional 10% tariff on countries aligning with what he calls the anti-American policies of the BRICS emerging nations. Let's bring in Tim Seymour to talk a little bit more about this. He's the CIO of Seymour Asset Management and a CNBC contributor. Tim, welcome to you.
Hi, Kelly.
First of all, where do we stand on the tariff front with many of these countries? I mean, they're already caught in the cross currents of what Megan and I were just discussing. So another 10%, what does that mean?
Well, it means we have effective tax rates here that are higher than they've been since post-World War II, and they might get a lot worse. And we've got 3 deals. Maybe we know one of them's done, and the least important is Vietnam. But I think the headlines today are a reaction to a gathering over the weekend and, frankly, a group of multinationals that have met before and are looking to at least have a role in a world that is not necessarily reliant on the U.S., that is seeking trade deals away from the U.S. And, while this shouldn't be seen as acrimonious to the U.S., it is something that obviously ruffled feathers. I think for the investment strategy around investing outside the U.S., it doesn't change anything, frankly. I think the tariff profile of the rest of the world will continue to evolve over the next couple of days, and we clearly have some volatility around these announcements.
Yeah, you said you were a little surprised, though, that the dollar's rising, but half a point or percent today.
No, it's fascinating. I mean, if anything, I would think that these dynamics, while in terms of a pure theory around deficits and collecting tariffs, et cetera, would possibly improve here. I think the reality is it's all somewhat dollar weaker. And I think the trend on the weaker dollar remains. And it's not necessarily because the rest of the world's going to start selling our currency. And I think some of the fund flows around the dollar, first of all, have been more about maybe global hedging against a weaker dollar. I don't think we've seen an outright sale of U.S. assets and an outright sale of owning U.S., but I think there has been positioning to at least hedge against that. Now, at some point, I think there will be more of that. But my general view on investing globally and where we have seen outperformance is there have been a handful of important, obvious triggers to getting people's attention. But we're talking about 15 years of underperformance and fund outflows.
Exactly.
Last week, you had $5.5 billion of inflow into EM equity. And I think that's the kind of thing that you're going to continue to see, mostly because people are underweight.
Does a 10% tariff matter to any one of these individual countries? And this basket is so large. They're all so different. But is it a bigger threat to Brazil or to Saudi Arabia? Saudi could be interesting just from a geopolitical point of view. But does it matter? The market performance of a lot of these countries, like you say, has been decent.
I think the Latin American countries that at least have exposure to commodities, copper, oil, and gas, are going to do what they do, which is be dollar exporters with a domestic cost base in local currency, and I think they're going to be okay. I think the tariff regime that's being put out there is something that certainly will have an impact. But I don't think it's changing how Brazil and India and China and Russia is thrown in the BRICS. But obviously, that's a totally different story in terms of sanctions we have around Russia and where they sit in global trade. I think it's really only about oil.
Right, and going back to the big kahuna, the C of the BRICS, where are you on the sort of trade and tariff issues with China and on the prospects for their market now?
Well, I think we have gotten a little complacent on the risks around what kind of a deal will be struck. And I think some of the rare earths announcements and some of the announcements that we have a deal, at least the administration right now is listing China as a deal done or more or less done and not a place where I think they're digging in. This extra 10% to the BRIC nations, we'll see. I think investing in China tech looks very interesting. I think part of the story around investing in China tech is that China themselves have taken a lot of the pressure off their national champion mega cap tech companies, Alibaba specifically, Tencent specifically. We've seen some resurgence over the last couple of weeks in terms of both the data and the enthusiasm around at least a resurgence in Macau. We see domestic travel picking up around China. So I think those economies, those interests, those plays and those stocks that are not necessarily about the global trade dynamic, and I think that are really more about either domestic consumption or purely valuations that are very attractive, look that much more attractive and still are very much out of favor. China sentiment for investors remains very low.
Yeah, no, agreed. Tim, appreciate it today. Thanks for chiming in.
Thank you.
Good to have you on. Tim Seymour. I like the exchange graphic there, too. Very smart.
Yeah, of course.
Coming up, it's the call of the day on Wall Street. William Blair saying the big, beautiful bill might be too much for shares of Tesla. They're downgrading the stock, and the shares are down about 7% today. We'll talk to the analyst next. Plus, a CNBC special report.
¿Se escucha, verdad? Sí, se escucha. Bien. Pues para ser lunes va bien. O sea, dos rentabilidades arriba del 100% es una locura. Y ya salió el súper, ya salió la renta, ya salió casi todo. Las deudas también, que también las deudas. Estoy checando un tema con Cuspi para mover el millón. Cuspi. Vamos a iniciar sesiones de eso. Ok. Y se supone que la clave está. Dos. Gestión.
Failure to overcome our two shorter-term moving averages here. So we can also see, looking at the chart in more of the big picture, the 360 level, our red line here, old high point, breakout point, after the break to the downside, it then became resistance. Once again, it was resistance 2 more times. So that's a pretty interesting and notable ceiling that the traders might have their eye on to the upside, that 360 level here. But for now, recapturing our trend line, which also coincides with our 2 moving averages, right around 318 to 320 or so. That's probably the first on the list of goals to achieve here for the bullish crowd.
Okay, and so for the bullish crowd, again, as we zoom out and perhaps look at the bigger picture of Tesla, I mean, obviously each day brings a whole new wave of volatility, but what other trends are you seeing technically wise that, I mean, perhaps could give some encouragement or provide just some more clarity for that definite scrutiny that is always on a name like Tesla?
Yeah, so when we do look at our volume profile study, we can see that we had a fairly large node here that lines up with our blue linear regression line, our line of best fit, right around 340. So, or excuse me, 340. So that was a key area that the bulls would have wanted to hold on to. It's noteworthy that we have slipped below it. Now we are in the situation of a relatively lighter volume area in which price is trading. So we could see faster moving prices. We could see this volume profile point of control, our thick red line here, near about 246 or so. That could come back into prominence here. That's our heaviest trading area. But for now, our purple 250 2-day EMA near 293, that's the kind of litmus test today to see whether we can hang on to that level heading into the close, or if this could be the start of a more severe downside move here, especially if we start taking out these previous...
Dice Trump que cualquier empresa que se alinee con las políticas antiamericanas de los BRICS son aranceles adicionales del 10%. No, man. O sea, cualquiera que siga esto, 10% más. Como cuando estamos en los exámenes de la maestra que nos caía mal, nos cargaba, y era como de, ¿te levantas? Menos 2 puntos. ¿Quieres ir al baño? Menos 2 puntos. Levantaste la mano, menos 2 puntos. Y así sucesivamente. Básicamente eso estamos jugando. Ahorita estoy viendo ya las inversiones de la semana pasada y vean, en rojo, 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 rojo. Mal, 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 mal.
Last time there was some rumblings around the big beautiful bill and things like that between the president and Elon. Looking at collecting 50 cents here on this $2.50 wide trade. So same max profit potential as the Uber strategy, $50, but much shorter time frame. But there's a trade-off. In this case, the trade-off is rather than risking $150 like we were in Uber, you're risking $200. So that relationship's 4-to-1, which probably means it's slightly even higher probability of success. But you always pay for that probability of success. 269.50 is the break even. So risking a little bit more, 4 times more than the profit potential. But if it stays above 270 through the end of next week, you can make that $50 per spread.
And a bit more short term here, as we do not really have any major catalysts in Tesla on the horizon. We did obviously get those deliveries, but as we know today, we don't necessarily even need Tesla-specific news, or maybe just, Tesla-specific fundamental news is better put, perhaps, to see shares move pretty significantly as they are today. We'll leave it there, though, for Chartmaster. Now, coming up next, it's time to talk the latest with NVIDIA, as we did see shares nearing now that record market cap on Thursday. But unfortunately today, with the overall market, we are down about 0.6% in NVIDIA shares.
Trading at Schwab is now powered by Ameritrade, unlocking the power of thinkorswim, the award-winning trading platforms. Bring your trades into focus on thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization. And track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab, a modern approach to wealth management.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Welcome back to Next Gen Investing. It's now time to discuss NVIDIA for FOMO, as we frequently do on this show. Today, with a modest move to the downside. Joining us for more on some of the movement we're seeing today to kick off this week is Marley Caden, of course, contributor here for the network. We have a Citi note today that's optimistic, but you wouldn't really know it based on price. I think that, simply put, probably with the overall market lower, that's the explanation. But analysts do still see some favorability here as a result of some of the trade turbulence hopefully coming now behind us for NVIDIA.
They see quite a bit of upside, actually. They raised the price target to $190, up from $180. They maintain that buy rating. So that implies about a roughly 15% upside from current trading levels, even though they are down about 0.6% right now. What they're saying driving the increase is this major expansion for AI demand and infrastructure, particularly from sovereign governments. That's where they're seeing the huge potential increase. So Citi's now assuming that their total addressable market for 2028 for data center semi-AIs to reach $563 billion. So that's 13% above the prior expectation. And their networking TAM up $119 billion, up from $90 billion. So that would indicate a sharp sales increase for NVIDIA. They're really expecting things to grow. Data center revenue, they also raised for fiscal year 27, up 5%, 11% for fiscal year 2028. Networking sales are expected to project 12 and 27% growth, respectively. Gross margins, they're forecasting to continue to expand, normalizing in the mid 70% range by year end. So a lot of heavy boosts here. Also noted concerns about any bottlenecks in their supply chain have seemed to ease. They did flag some downside risks, obviously, and partly why I think we're seeing some drop on this positive note is renewed export restriction concerns and what might happen with these tariffs. But that seems to be hopefully a temporary issue for them, as most of this is long-term projection that all seems to be favorable for NVIDIA.
Yeah, great marketplace to be in. I mean, they adjust the one aspect of the business by $63 billion, and they see that creating another $250 billion in market cap. If it were to get to 190, not even 180, that would be another $750 billion thereabouts in market cap. So we're talking almost $1 trillion in additional upside for the world's, either depending on the day, largest company by market cap or second.
I mean, as of close Thursday, they were at $3.89 trillion. They're just shy of that $3.915 trillion closing record from Apple. I mean, they're marching closer and closer to that $4 trillion market cap, every single day.
And also then moving away from even second place, which is Microsoft. I agree, Alex, that it's like one of those things I'll nervously say and then go back and check, because it's like every day it does feel like you're competing with even like your Apples, Microsofts. But now, as we see, even with the pullback today, firmly as the world's most expensive company as far as market cap. I mean, it's difficult to even find them the number 2, and I know that's what everyone seeks to do in the AI arms race, as I know we coined it. But finding that number 2 right now has just been difficult because it seems like it's NVIDIA and it's everyone else.
And then the race. And then the race for everyone else, yes.
Yeah, and I also think with that being said, I mean, as far as even like conviction goes, I know that with this positive note today, it doesn't feel like we've gotten a whole lot of pessimism from the sell side as of late.
No, not really. And, you know, I think an indicator for them, too, a safety indicator, is the other semiconductor stocks also opened lower today. I know you were talking about AMD earlier. Intel, Qualcomm were both down more than 1%. I think a factor weighing on them right now also is that earnings from Han High Precision Industry, which is business as Foxconn, is coming out. That Taiwanese company reported second quarter revenue on Saturday, but it flagged some major macroeconomic and geopolitical conditions and exchange rate fluctuations as potential headwinds. So Taipei listed shares did close lower on Mondays, but I think that could be a little bit of why we see a bit of downturn here as well, too.
Yeah, no, it's good context. I mean, I just can't get over just not only how successful this company has been, but also when you look at it from an activity standpoint, it's so far and away the most active stock now, too. 90 million shares changing hands. 1 million in some change options contracts changing hands a day. All the while, it continues to outperform. It continues to lead this market higher. But it's like the perfect stock to do it. It's the biggest one. It's volatile. It's the one that seemingly everybody trades and invests in. Like, if you were to pick one name of the S&P 500 to be your leader, like this is the one many would pick. And that's why I think, to Jenny's point, there's so many questions like, what's going to hold it back? But like no one seems to have the answer other than, oh, this is a hardware company that's getting pretty expensive. We've seen that before. .com comes to mind, names like Cisco. But it not only, weathered a period of volatility, Marley, it came back to it and set a new high. Like that didn't happen in .com.
No, I mean, I think they're showing they have a lot of potential upside. Interestingly enough, you don't see these huge price target increases when we talk about NVIDIA. I think because they're already so expensive. So you see a $10 increase. A lot of the time on this show, we're talking about they got a $50 bump.
Right.
And so these are always a little bit smaller. It always has that buy rating. But, it does imply a 15% upside. So I think we're just going to continue to see this unless there's some macro change or we get more information on tariffs one way or the other. But I think that's what we'll keep seeing are these small moves to the upside every single time. And like you said, Alex, there doesn't appear to be anything stopping them. There's no glass ceiling in sight.
There does not appear to be. I mean, I know that right now the overall situation, economically speaking, could always evolve. But you see right now it's 200-day and 50-day, even more impressive, moving averages consistently moving to the upside. I mean, a name that's now 1.5% off of those all-time high levels. And we'll have to see if they can now top that previous record for market cap, which is we're right around those levels, even with a pullback today. So lots to be excited about, I guess, if you're a believer of NVIDIA and some of its future growth trajectory. Now, when we look at trading things here, and of course, NVIDIA, just for example purposes, it's difficult to want to be, I'd say, super pessimistic. And I know the argument can always be valuation. The expectations have come really high. But also, it's the freight train, the momentum that it's very difficult to get ahead of it or get sort of maybe in the way of it because this name has proven its resiliency even in terms of so many things still being uncertain.
Eventually, bears will make money on NVIDIA. It will go down for 1 or 2 or 3 or 4 or even months. Who knows? But how long is that going to take? And how wrong are you along the way? That's always going to be the question. But for those who are hesitant to buy a stock at all-time highs but do see upside, you can do things like option strategies to create risk parameters for a strategy where you can control how much you have exposed, but still can participate a little bit to the upside. So that's what we've done. Looking at this stock, objectively, it's trending higher. Objectively, it's in the sector that seems to have the primary, growth spotlight on it, and it has a lot of, tailwinds behind it at the moment. And so, looking at a call vertical spread, essentially at the money. It's slightly out of the money, but it's structured this way because, unlike what we looked at in Tesla, unlike what we looked at in Uber, where we risked a little bit more than we could make, in this strategy, Jenny, we're risking a little bit less than we can make. In this case, we're doing a $7.50 wide call vertical, July 25th, towards the end of the month, 160, 167.5, so it's $7.50 wide. Looking to spend $250 on that. That'd be 1/3 the width of those strikes, which means we're risking 1 with a chance to make 2, or in this case, we're risking $250 with a chance to make $500. So for those who are believers in NVIDIA, think this will ramp up over the next month, but want to control how much they have at stake. Don't give up too much of the upside. This is a strategy that allows you to risk 250, but a chance to make 500. Now you need some help. The market needs to get to 162.5 just for it to break even. But if it does get running towards some of those optimistic targets, potential profit out there.
Yeah, and I mean, 190, I think also, obviously, the analyst's price target today would be a great place for us to be, but looking at more short-term, some more of the near-term realistic price you can see for NVIDIA, I do think there's seemingly definitely that appetite for some further upside. So we'll leave it there. Appreciate it, Marley Caden, for the insight as well as the example trades today. Now, coming up next, though, we will shift gears and look at the latest with right now some maybe more social trends. TikTok, the latest right now with talks with the U.S. and China, as well as Prime Days, as we do kick off Amazon Prime Days starting tomorrow.
Deportation. Tan rápido, son las 12, o sea, en serio, uno está acá enfocado en la bolsa y el tiempo pasa de volada, o sea, siempre son las primeras 3 horas del día, se van en chinga. Hay días buenos y días malos. Bien, tengo que checar esta cuenta. A ver, aquí estás. Tengo que checar los movimientos. Para su registro, 1, 2, 3, 4, ahí está.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available
Mira, NLP ya
anytime,
fue.
anywhere, any device.
Se
For
acabó
free.
la fiesta.
Schwab Network.
Welcome back to Next Gen Investing. It's now time to talk the latest with the turmoil of U.S. versus China and how it relates to TikTok, and perhaps how we could see TikTok invest more heavily in the U.S. to hopefully keep its operations fully running. So joining us now is Diane King Hall, the host of Morning Movers, for more on this story. So we hear some reports. Trump says he'll be talking to China this week. Diane, walk us through the latest as it pertains to TikTok.
Yeah, so we've seen these according to multiple reports. It sounds like the restart of talks on this front, and we know it comes amid the thawing of relations between the U.S. and China, especially on the trade front. So maybe the time is right for this conversation as it relates to TikTok. At least that's what the signals are. President Trump has said reportedly that China, with talks with China about a TikTok deal, will begin today or Tuesday. It essentially suggests there's a path to reopen this conversation about negotiations. President Trump claims the U.S. pretty much has a deal in place, but it does need potential approval from China. The backdrop of this is, of course, there is another deadline looming. That deadline is not until the fall, but it can come, quickly. September 17th is that deadline of when ByteDance would need to divest U.S. operations or face a potential ban. I know it feels like we've heard this story before. We have. The timeline has changed. We know that the original enforcement deadline came through the beginning of this year, and that was essentially to give room for a potential resolution. That timeline has been kicked down the road. There was an executive order that kicked that timeline out to September. Of course, there was a previous attempt to spin off TikTok earlier this year, and that stalled out. So China has given indications it would not approve that deal, especially after you had that reigniting of tensions between the U.S. and China over trade. President Trump has told reporters that he believes the deal benefits both China and the U.S., saying that there's this positive relationship with President Xi Jinping, but he still acknowledged there's uncertainty. So that he thinks so, but there is not an exact deal on the table right now, guys.
Diane, when we talk TikTok in particular, is this just a piece on the board, it seems, right now? I mean, it seems to be kind of a political pain in the butt for the administration with this law that has to continue to, kind of be pushed out that was passed. But when it comes to finality around this, it really does seem to me that it's part of the negotiations broadly. In the interim, though, a name like Meta is higher today. Is this a read-through on this, or is that just happenstance?
Well, I can't call exactly if that's a read-through or a happenstance on this, because we did see Meta turn higher when there was that one-day period where TikTok was essentially offline, right? And you saw Meta as being a beneficiary of a potential shutdown of TikTok. But clearly, President Trump wants to save TikTok and wants it to continue to operate in the U.S. And that probably is a reflection of how much support there was from young people in terms of the election, right? So looking for a resolution when it comes to both the U.S. and China interest in this. Now, in terms of where penalties could be enforced on this, they did buy time, right? The Trump administration bought time through September, so the Department of Justice can't enforce penalties on TikTok or its related platforms until after September 17th. That's under that Protecting Americans from Foreign Adversary Controlled Applications Act. So it buys more time for a negotiation, but of course, the clock is ticking, rather. We know that TikTok has more than 170 million users here in the U.S., so it has a key footprint when it comes to social media. At the same time, it's part of that conversation about debates over national security. So you can imagine they are trying to find a resolution where there can be a U.S. component. I've seen reports that they're developing a U.S. version of TikTok, so that may be the resolution that comes into effect in this instance.
Yeah, and I think that will be something, obviously, we'll get further updates on. But those that are definitely watching the latest developments with TikTok and how it plays out, I do hope that we can at least see operations resume or continue here in the U.S. and not go back to where we were several months ago. It was all over my social media just to say that, and people were not happy. So do not anger the TikTok or the Gen Zs, I guess, is maybe the takeaway here, and keep TikTok running. Appreciate it, though, Diane King Hall, as always, for all of the wonderful insight, our host of Morning Movers. Now I'd like to welcome, though, in Gaurav Pani, the president of independence at GoDaddy, for more on Prime Days. And I'm excited to talk about this. I am an avid Prime Days follower, but I am very curious specifically on how it has evolved and really shaped a lot of these small businesses. Third-party, really, retailers on Amazon, I think, are underappreciated as part of the story. So thank you so much for joining us today, and hopefully walk us through some of these developments we're seeing in regards to Amazon and its relationship with smaller businesses.
Thank you for having me here representing GoDaddy. What we have realized now is that the ethos of retail in this country was established with Black Friday events, shopping events like Cyber Monday, and now Prime Day is just like one of those events. And micro businesses have adapted their e-commerce strategies to capitalize on these high traffic online shopping events. And so GoDaddy, what we do is we should support millions of entrepreneurs in preparing for this type of traffic event. And if you look at our history, our business was started with not necessarily shopping events, but spiky events like the Super Bowl, where we would advertise and we'd have surges of traffic. So we understand that behavior pattern really well, and we prepare small businesses to be ready for similar patterns so that they can take those small spikes and practically make up their entire year's revenue.
Gaurav, talk to us a little bit about how successful these smaller businesses that use Amazon maybe as a door into their business are at getting consumers to then go directly to their websites for return purchases. And I guess follow on to that is that even necessary, or can they continue to go back through Amazon?
Yeah, absolutely. I think the number one priority for small businesses is to be discovered. And in order for discovery to work, their products have to be where their customers are. Sometimes those customers are able to find them directly on their website, but other times they're on marketplaces. And still other times, like you mentioned, TikTok before this piece, they're on social media. So small businesses have to be present everywhere that their customers are. And once they acquire those customers through these third-party channels, they need to re-engage them through their own house advertising, whether it's through email or push notifications or what may be, to make sure that the customers come back directly to their websites. In fact, what we see at GoDaddy is that 76% of our customers are using their site to sell products to their end consumers through their website, not just for the sale, but also to fulfill returns and answer a lot of product questions. And also then 67% of those users start to use that website to build their reputation. So it's just a continuum of acquiring the customer on whichever channel they're on, bringing them onto their website, and then retaining them to increase lifetime value.
Okay, and so I'm curious on that note, how GoDaddy specifically is helping so many of these smaller businesses or maybe mid-sized businesses really compete with big brands, and how AI has played a pretty critical role in that, I'm sure.
You're absolutely right. AI is the big equalizer for small businesses, where all the data of the world is now at the fingertips of small businesses that was always available to large corporations. And what these small businesses are able to do is they're able to use technologies like GoDaddy Aero to generate content. In fact, 73% of our customers are applying AI to generate content for their websites. And then what we see is the customers on our base that are using GoDaddy Aero end up generating about 43% more sales than those that are not. So clearly, there is a path to using AI to create content and then automate a lot of workflows so that it results in higher sales.
When you look at how those tools and other tools that GoDaddy is able to provide to these entrepreneurs, how has that allowed them to scale their business? Obviously, a company like Amazon opens the door to the world, but say they have a product that really catches fire, how quickly is GoDaddy able to help them scale up to meet those demands, at least from a direct interaction standpoint?
Yeah, the websites that we built, our platform scale immediately. They're all elastic. As demand comes in, the site's able to handle more traffic. And it's not just continuous traffic, but even spiky patterns. In fact, spikes are typically the things that take websites down, not continuous growth of traffic. So we have our infrastructure ready to support our customers in ways in which we would support ourselves. So I think that the learnings that we've had from running our own business in the cloud and having an e-commerce ecosystem that can scale to millions of customers is available to our customers as well. And I think that is the big differentiator for our customers to be able to scale and maintain their businesses online.
Yeah, and I think that this will be definitely an exciting time to watch as things are quickly evolving. And we know that the e-commerce world has been one that is as rapidly as evolving as social media almost at this point, alongside just new technologies, AI. There'll be definitely a lot to be excited about in the coming months and years. So we appreciate it and appreciate your time providing all of that clarity. Gaurav Pani, President of Independence at GoDaddy. Now, coming up next, we are now going back to our broader tech theme, talking about Core Scientific being purchased by CoreWeave, and both names seeing some significant downside as a result of the confirmation of this deal. So we'll dive into the latest coming up next.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
I'm Nicole Petalides, host of Trading 360 and The Watch List, live on the floor of the New York Stock Exchange, where we bring you breaking news, experts, CEOs, influencers, and analysts. It's all available on Schwab Network. Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network. Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Welcome back. Time for Under 30, looking at the story within the core space. I guess the best way I could frame this, just because CoreWeave and Core Scientific both got that in their name. George Chillis is here. Jokes aside, senior markets correspondent for the network. George, let's talk this story. Both stocks are lower, which is kind of unique, but CoreWeave down 3.2%. Obviously, Core Scientific down a lot more than that, down almost 17%. What do you make of it?
Well, I think the first thing you got to look at is, on the top line, it looks like this deal is actually good for Core Scientific shareholders. I mean, looking at the acquired amount of $9 billion, that was significantly higher than the close on Thursday, which is around $5.3 billion in terms of market capitalization. But the reaction is baffling some, and I can explain why I think is what's going on here. But in essence, we talked about this potential synergy and this potential partnership that may manifest in acquisition. I think it was at least a week or a couple of weeks ago we talked about it.
Bitmain se ha mantenido en 114. Eso es bueno.
And so CoreWeave, in
Y
a
Wolf
nutshell,
ya
what
quiere
they do is
sobrepasar o
they're
no?
essentially a GPU as a service
Sí,
company.
quiere
They provide
sobrepasar.
GPU
Es una
infrastructure,
locura.
major installations for hyperscalers to basically lease on demand product or GPU technologies for AI computations. And the other thing is, if you look at Core Scientific, this was historically a digital mining company or a Bitcoin mining company, which now is becoming a larger player in the digital infrastructure space to help, of course, alleviate the workloads needed at the marginal level for companies like CoreWeave, which they need, spillover demands to actually make these computations possible. Now, I think what's happening here is it's a really interesting situation because on the face of it, $9 billion is a significant premium to Thursday's market capitalization price, but you're actually seeing the acquired company stock performance worse than the acquirer. And I think the reason being is the financials are stretched. If you look at the aspects of CoreWeave, first off, the company's market cap as of close on Thursday was around $79 billion. They have about $12 billion in debt, $1.3 billion in cash. So they didn't have a lot of cash to work with to begin with. This is from what I understand, is an all-stock deal. The challenge with CoreWeave, before they even made this acquisition, is they were already financing the capital expenditure needs for Core Scientific. But at the same time, that debt that they have is actually collateralized by the hardware that they actually lease out to their customers, which are NVIDIA's GPUs. Now, if you think about the nature of technology, technology becomes antiquated very quickly. So on our assumption that these GPUs have a 2 to 3 year lifespan, the debt that CoreWeave has is staggered in terms of maturities, and the interest is quite high. If you look at last year, they generated around $2.7 billion in sales, but almost $600 million of those sales had to be serviced by interest on the debt alone. So that's quite large. And the other last thing I'll point out is, if you just think about the numbers, $9 billion is a tremendous amount to purchase for a company that's generating 84 million in trailing sales. So CoreWeave is already stretched financially, but at the same time, they paid more than 100 times sales for Core Scientific. So you put it all together, and there's share dilution. And that's why we are seeing both companies move lower. In particular, that's why we're seeing Core Scientific, which was the acquired company, move on a meaningful percentage decrease relative to CoreWeave, which is also down.
Okay, so George, before we let you go very quickly, I mean, as far as improving some of these debt levels and their financials, I mean, do we see the path for that in the coming future, or are we going to be more in a wait-and-see story here?
So I think, look at the market reaction. I think the market is telling us sort of wait-and-see situation because, ideally speaking, these two companies were working very well together as strategic partners. But now, essentially, they're going to have to find ways to mitigate expenses. So if they can demonstrate
¿Qué pasó? Se trabó el audio. Se trabó el audio porque aquí me marca que sí se escucha en el OBS. Está muy raro.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge.
Organization. We took the tack that we figured there would be a number of changes with the tariff regime that's in place, and we have seen that since then. We would take the time to do the negotiations, understand, can we source it somewhere where there will be a lower tariff or back to the U.S., and then eventually we'll take pricing. So we've taken a pretty conservative viewpoint of it, but we're getting closer to where those decisions will be made.
A math question. The cost of your goods has gone up by X, leading you to pass along XYZ% to customers, and take what percentage on margins so far?
Yeah, we really haven't had to make that decision as of yet. We have a strong continuous improvement program inside the company. It's worked well for us for many years. We challenge all of the costs that we already have in the business. How can we be more efficient so that we're not passing dollar for dollar cost increases coming through?
Question about the broader housing market as all this is happening. We know turnover is very, very, very low, but there are some signs in some of the home builder stocks and elsewhere, maybe people are a little bit coming back to the remodeling space. Can you tell us anything about that?
Yeah, what I'm very encouraged by is there are signs that there's pent-up demand in repair and remodel. We've had a couple years where it's been negative, and over time, repair and remodel tends to even out. Whether it's 6 months, 12 months from now, when we really start to see that come through the economy, tougher to say on that part of it, but there's definitely signs of pent-up demand. And of course, we have an aging home stock as well, too. That only continues to get older and older.
Tell me about it.
More of these repairs will need to be done.
Do you think higher prices, or I don't know if this is contributing to any supply delays, is that potentially a headwind to spoil that recovery, or do you think that recovery remains intact?
It's keeping people in their homes rather than moving to new homes, and that repair and remodel will be done either way. I would prefer to see existing home sales increase. That tends to drive repair and remodel on its own.
Right.
But that's not something I'm counting on right now.
Nor are many. Brian, thanks for joining us. Really appreciate it. Brian Fairbanks, CEO of Trex. And that's it for The Exchange. I'll go join Brian Sullivan for Power Lunch, which picks up right after this quick break.
sir. It seems that the Gladiator is getting a lot of positive social sentiment.
Innovation changes everything. With one investment, you can access the NASDAQ 100 innovators who are rethinking the world. Before investing, carefully read and consider fund investment objectives, risks, charges, expenses, and more in prospectus at Invesco.com.
Only service now connects every corner of your business, putting AI to work for people.
Every corner?
With Schwab.
Tómala.
Good afternoon and welcome to the Watch List. I'm Sam Bartas. It's 2 p.m. here at the New York Stock Exchange. Thanks for joining us. Here's what's coming up on today's show. We'll preview the upcoming earnings season and the state of the AI trade, as well as some of the top names in the tech sector. Then we'll examine current volatility levels in the market and how you can use options to mitigate some exposure to headline risk. And our panel will take a look at the outlook for the labour market the rest of the year following a slew of jobs data from last week. Let's take a quick look at how the markets are going right now with only 2 hours left in the trading day. Of course, a fresh trading week. We've got weakness across the board. We've got the Russell 2K underwater by about 1.5% or so. The Dow taking a leg lower after the lunch break, down 1.1% right now. It coming off the back of the fact that we've got some letters now. Trump imposing a 25% tariff on the likes of South Korea and Japan, according to his messaging there. So no doubt we are tracking some of the tariff uncertainty in the market. Here's a look at the dollar, gold, crude oil and Bitcoin as well to see how things are moving in the market off the back of the weekend's flurry of announcements. Everything from, of course, what the White House has been saying about tariffs, but also the big, beautiful bill as well. We've got the dollar ticking up slightly higher, 0.4% at 97 there. Gold is down at 3,341. Crude oil up. Of course, we did get the OPEC Plus announcement out over the weekend, 0.7% higher at $67. And Bitcoin futures tracking lower there, 1.9%. at 108,000 at those levels. So for some of the biggest stories in the market, so let's welcome back in Kevin Hinks, the host of Fast Market, a Schwab Network. Let's start off with Tesla, Kevin, because downgraded to a market perform over at William Blair. But I suppose it's just one part of the biggest story that seems to be weighing on the stock right now.
Yes, Sam, I'm a big fan of watching the headlines and tracking the trend of headlines in Tesla. And these are just a slow drip of negative headlines. Today, William Blair downgraded Tesla to market perform from outperform without a price target. Now, though they said the $7,500 loss of that tax credit was pretty much expected when the big beautiful bill passed, it was another thing, which is the regulatory credits that Tesla gets that they accumulate and then sell to internal combustion engine companies as much as $2.5 billion a year. They may lose that, and that is another reason why Tesla is being downgraded by William Blair now. Obviously, there's other headlines today, and investors think that the distractions of Elon Musk also could hurt Tesla stock performance, but William Blair downgraded it because they think these regulatory credits could hurt their bottom line, Sam.
Yeah, it's interesting. I was listening to one of the analysts from William Blair who was also talking about the competition from Chinese EV makers as well as Waymo when you look at the autonomous driving, but also when you look at energy storage as well, which is part of Tesla's business. But as you say, investors wanting Elon Musk to really focus on business rather than politics, as Dan Ives put it. CrowdStrike, though, let's switch gears to that, downgraded to neutral at Piper Sandler. Talk to us about why.
Now, this was a little bit of a different angle that they're taking on CrowdStrike. Piper Sandler downgraded CrowdStrike to neutral from overweight with an unchanged price target. What they basically say is the stock has run a long way, and there's not a meaningful genesis for another leg up. So they don't think you should necessarily be selling CrowdStrike here, but they take it to a neutral and say they wouldn't add up at these price levels. They still have a long-term, very positive view of CrowdStrike, but because the stock has rallied, because of its recent performance, they are taking a more of a pause, taking it down to a neutral. So not as negative, just acknowledging how far the price of the stock has run, Sam.
Yeah, taking a bit of a breather. It does seem like this space is very crowded, but as Diane and I were talking about this morning, I mean, it's just not optional when it comes to cybersecurity, and no doubt this company very much a beneficiary of that. Kevin, awesome stuff. Thanks so much. Kevin Hinks there. Really appreciate it. Now let's take a look at the bigger picture with Michael Klarfeld, who's the Managing Director and Portfolio Manager at ClearBridge Investments. Talk to us about the S&P 500. I mean, the fact that it's overvalued is nothing new, but I mean, what are you doing about it?
Yeah, I think, you know, our message right now to investors, I believe, is that, you know, halfway through the year, folks should feel relieved, but maybe not reassured. The S&P is trading at about 23 times earnings, which is obviously way ahead of long-term averages. And that's despite the fact that earnings estimates have come down about 5% since the beginning of the year. It's also obviously incredibly concentrated in terms of technology stocks, both by sector and by individual name. And we think it's critical that investors maintain diversification. We think investors should certainly have exposure to these many of these tech companies, and many of which now pay dividends, which wouldn't have been the case, you know, 3 or 4 years ago. But we think that they need to be measured in their exposure and not lose sight of the risks of being overly concentrated. I think we are also finding some attractive investment ideas outside of high tech in some areas that people are maybe overlooking a bit.
Okay, so give us a bit of an overview of sort of what you're telling clients about where to find that diversification, because there's been obviously a lot of conversation too about looking international too.
For sure. So I think we believe that in this kind of market where there's a lot of enthusiasm embedded in stock prices, it's really critical that investors stay level-headed and focus on the fundamentals. And particularly from that perspective, what we're most talking about these days is valuations, right? Valuations have become pretty extended. So in terms of international and where we're looking, we do find that in the last year or two, we found opportunities in some of the European staples companies, which have traded at discounts to their U.S. peers, despite the fact that they have similar businesses and similar mixes. So, for example, one name we like right now is Nestle. Nestle offers a 3.7% dividend yield. It trades at about 18 times earnings. Nestle is the largest, most diversified food company in the world. And what we like about Nestle right now is really two things. First off, they have a new CEO who we think is really going to improve the cadence and crispness of execution. He's focused on that, and we think there's a lot of room for improvement there. And then the second piece is their portfolio. So I think what we're seeing right now in the United States in particular is that because of a confluence of factors, food staples companies have had a tougher time growing, particularly their volumes, but they're also feeling some pressure on pricing because of price increases they've taken over the last few years. And that reflects both sort of consumer sentiment and also obviously some of the GLP-1 trends in the United States are starting to impact food consumption. What we like about Nestle amidst these sort of trends is the fact that their portfolio is much more global than some of their peers, so predominantly outside the U.S. where the GLP-1 dynamic is less relevant. And then their actual portfolio of products is less tied to stuff that would be sensitive to GLP-1. So they over half their business is in coffee, pet food, and vitamins and nutrients, all things which are less likely to be impacted by some of those trends.
Okay, so you like Nestle. Bringing it back to the U.S., talk us through what else is on your radar.
Yeah, so I think one of the things, again, what we're trying to manage is being mindful of maintaining our rigor around valuation, but also thinking about what do you want to own from here, not just from terms of protecting downside risk, but where, you know, what are the dynamics we're seeing in the economy and markets, and where do you want exposure? And I think one of the areas we're finding opportunities and really thematically believe people should be invested is in real assets. So this could be things like commodities or infrastructure, real estate. And so in sort of, you know, the biggest one of these for us is ExxonMobil. where we've increased exposure pretty significantly over the last year. And what we like about ExxonMobil is, first off, from a sort of balance sheet and valuation perspective, ExxonMobil has a fabulous balance sheet. They are the best capitalized, also the largest and best positioned of the oil majors. It has a 3.5% dividend yield. And what's really so powerful about Exxon today is that because of their phenomenal portfolio, they're in a position where they should be able to grow their earnings at a double-digit rate without requiring any help from oil prices. And the reason they can do that is because their portfolio is growing while at the same time reducing its emissions intensity and lowering the cost per barrel. It's a very powerful combination. And from a commodity price risk perspective, obviously with oil prices having come down of late, people are nervous about that. But Exxon just recently told the street that even if oil went as low as $55 a barrel, which is well below where it is today, the company would still generate $125 billion in excess cash flow over the next 5 years. That's after paying their dividend and after investing in the business. That's about a quarter of their market cap, so a pretty staggering number. And as we think about investors considering or starting to worry more about sort of inflationary scenarios or stagflationary scenarios, Exxon's exactly the kind of company you'd want to be in that type of environment. They would benefit in the sense that in an inflationary environment, typically oil prices would rise, so their earnings would go up. And from a portfolio perspective, it would really provide a powerful portfolio hedge because most other names would be suffering in that kind of environment.
Right, obviously good to find opportunities in that environment, as you say, where we've got this prevailing narrative coming back of this supply-demand dynamic, and particularly what we got from OPEC over the weekend with regards to upping some of that production too, as you say, going to have an impact on prices. And just lastly, I think you mentioned real estate too. You have a name on your mind?
Yeah, we have, one of the names we like a lot there is Avalon Bay. Avalon Bay is the largest apartment REIT in the United States. Avalon Bay, we think, is best in class. They have a terrific balance sheet, a terrific portfolio, and the best track record of creating value over the long term. And what we like about Avalon Bay here is a couple of things. So first off, from a valuation perspective, it's got a 3.5% dividend yield and about a 5% AFFO yield. That's sort of the free cash flow metric in REIT land. And what we like about them is that if we think about the outlook for apartments these days, the employment situation is good, right? Unemployment is low, so people have jobs and are able to pay their rents. But then when you think about supply-demand dynamics for apartments, they're quite favorable. So from a demand perspective, because mortgage rates have gone up over the last couple of years, it's much harder for first-time home buyers to buy a house. So people are staying in apartments longer. There's less competition from sort of buying versus renting. And then within the market, within the apartment market, there's very little new supply coming on. Because interest rates have gone up and because of inflation, the replacement cost of their assets and the cost of bringing on new capacity has gone up dramatically. And so that should create a favorable supply-demand balance and at the same time provide a powerful pricing backdrop for the industry.
Okay, good stuff. We have to leave it there, Michael. Thank you so much for joining us today and giving us some of your stock ideas for today. That is Michael Clarfield, Managing Director and Portfolio Manager at Clearbridge Investments. Appreciate it. Well, coming up, Options Corner, Tom White joins us to highlight unusual options activity from the day and how investors are looking to trade on recent news of AMD, Eli Lilly and Wells Fargo. Stay with us.
Qué día, pero qué día. Para ser lunes no está mal. Por Dios.
Back to the watch list. It's time now for Options Corner, where we analyze unusual options trades seen throughout the day. Let's welcome in Tom White, host of Fast Market Schwab Network. And so let's start with AMD. You've found a bit of a bearish trade there.
Yeah, Sam, this name rebounded about 76% from those April lows, so it's had a good run here. It's still far below, over $90 below its all-time highs that we saw in March of 2024. But if you looked at their last earnings report, they saw 57% growth in their data center business. That was a positive. And actually, they saw big growth in their basic computing, so their legacy segment of their business. So they're seeing some better growth. It's pulling back about 2% today. It's still up about 11% so far this year. Citi came out with a note today. They raised the price target on it to 145 from 120. They said the negative impacts from tariffs that a lot of people on the street expected aren't coming to fruition. That's a bonus. And then if the trade deals work out, especially the one with China, that could also be a positive. And I think if you take a look at the way that it's underperformed maybe some of its competitors, especially NVIDIA and Broadcom, maybe it's got some room to run. But I saw some unusual option activity in here. It was kind of bearish and maybe taking advantage of this 76% run that we've seen over the last 3 months or so. Trader bought 5,000. July 18th, the monthly options that expire in just a couple weeks. The 130 strike puts paid an average debit of about $1.60 for these puts. So this trader needs the stock to go below 128.40 to break even over the next 11 days. That's about 5% below the current share price. So this could be a trader that's just speculating to the downside, or it could be a trade where they're hedging maybe some of the gains that they've had since those April lows, but definitely some bearish activity here.
Okay. Tell us about the bullish trade, on the other hand, you have found for Eli Lilly.
Yeah, Eli Lilly's now in bear market territory, right? It's pulled back about 21% from those all-time highs that we saw last August of about $972. They just released Manjaro in India, and they said that's doing well right now. And they just had some released some studies at the end of June that basically said their new oral pill for weight loss to compete with Wegovy and Mounjaro and there are others in this space, Zepbound, that the results of those trials were actually pretty positive here. So that's a bonus for this company, but it has pulled back. They just acquired Verve Therapeutics, $1.3 billion. That's going to open up some of their cardiovascular disease receptors there from that company. So that should be accretive relatively soon on this one. And the stock, as I mentioned, is pulled back pretty significantly. So a trader repositioning an existing position they had. They bought 10,000 of the August 15th, the 850 strike calls. They paid an average debit of about just over $16 on those. So the break even of $866.35 over the next 39 days. That's about 13% higher. That's where this trader needs the stock to go to start profiting on this one. Call volume, about 8 times normal daily average volume that we've seen over the last 5 trading days. So some bullish activity, even though the stock's pulling back again today. And I mentioned this is a reset of a position that they have because this trader sold out of 20,000 of the long July 18th 850 strike calls, gave themselves some duration on this one. But they definitely need to move to the upside of at least 13% to get above that break even.
Down alongside the broader market and the sentiment there, but as you say, a lot of optimism around some of those developments. And lastly, a bearish trade you found for Wells Fargo.
Yeah, they report earnings next week. We'll get a lot of the financials reporting, including JP Morgan, Citigroup, and Wells Fargo next week. And Wells just settled at record highs last Thursday on the close. So it's had a great run, up about 16%. So far this year, even with the pullback. I mentioned that earnings on the 15th. Raymond James double downgraded Wells Fargo to market perform from a strong buy without a price target, saying that the stock's been up so significantly that maybe it's getting a little bit overvalued ahead of that earnings event. And then if you take a look at maybe the yield curve, the 2-year, 10-year yield curve, that's about 50 basis points positive. So that's improved quite a bit. Net interest income expected to be pretty robust. But I think if you look at some of the commentary around the financials recently, as stock markets are hitting all-time highs, pretty optimistic at this point, even though we've seen growth rates start to slow. But the consumer has jobs, and they're still out there spending, maybe just not as much. But I think this was an earnings setup here. This trader out in the July 18th, monthly options expire in 11 days. They'll capture that earnings event. Trader bought 4,000 of the 81 strike puts, paid an average debit of about $1.33 for those. So the break even for this trader, where they start to profits below 79.67 over the next week and a half. That's about 3% below the current share price. That's about what the option market's priced in as far as a move goes also. So like I said, this could be a speculative bearish play from this trader, or protecting maybe an existing long stock position where they don't want to give up some of those gains, just buying a little bit of protection.
Okay, all eyes on that earnings. July 15th is the date, and obviously we're keeping an eye on what's going to happen with that trajectory of rate cuts if and when they come. Thanks, Tom.
Thanks.
Awesome stuff. Tom White there. Well, coming up, we'll preview the upcoming earnings season as a state of the AI trade as tech looks to lead the market higher. That's coming up next on the watch list.
Trading at Schwab is now powered by Ameritrade, unlocking the power of think or swim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses, and more. All crafted just for traders. And with guided learning paths, stacked with content curated to fit your unique goals, you can spend less time searching and more time learning. Trade brilliantly with Schwab.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. The Platforms and Tools webcasts are designed to help you broaden your knowledge of platform features and resources available from Schwab. You'll learn tips and tricks to help navigate Schwab.com, Thinkorswim, and mobile-based platforms. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Esta vez fue un café frío.
Welcome back to the watch list. I'm Sam Bardas, live from the floor of the New York Stock Exchange. Let's take a look at a few movers in the market right now. Autodesk was upgraded to buy from neutral at D.A. Davidson. The analysts are raising their price target on the software stock to $375 from $305, believing in the business and that it is on a path to achieve top decile performance, given a combination of demonstrated success in growth businesses. D.A. Davidson says that transaction model changes will create noise around margins, but it believes Autodesk has room to drive
Tengo que actualizar mi calendario que
efficiency
tengo en la pared,
substantial
por cierto.
profit growth. And Netflix was downgraded at Seaport Research to neutral from buy, the firm citing valuation and the time needed to execute. Against expectations for the downgrade, Seaport now sees less than 10% of upside in the shares and believes plenty of the long-term opportunity is factored into shares. Seaport says Netflix needs time to execute against expectations in advertising, aggregating, launching experiences, and expanding share gain.
Well, let's welcome in our next guest, Lisa Martin, research analyst at the Futurum Group. So we're talking about the earnings season, which is just around the corner. What are you expecting? Because I've been talking to some analysts who do expect to see continued strength from what we saw in the previous quarter. Do you think that has legs?
I think it does, Sam. Great to be with you. Thank you for having me. Overall, if we look back at the first half, the tech sector, it was positive. We saw resilience, especially in AI and cloud computing. Q1 was a little sluggish, but the sector really did rebound in Q2. We saw some major players. Of course, we have to talk about the Mag 7, NVIDIA, Microsoft, and Meta. But there were some other non-Mag 7 notables that also helped drive first half growth that we expect to do well in second half as well. Palantir jumped an impressive 70%. That's thanks to government contracts, AI-driven defense solutions, though it's a bit controversial. We also saw Cloudflare, AI-powered cybersecurity, rise 70%. And that highlights what we'll see momentum in the second half is this growing demand for AI-driven security solutions. And then in the cloud side, we saw Oracle report a big jump in cloud revenue, with OCI growing over 50% in the first half alone.
And when we talk about guidance, obviously that is what everybody pays attention to and why we obviously see movement in the stock on the day when we hear those report cards. I mean, it was a quarter in which we saw a lot of companies actually holding off on giving, some of those outlooks. But in tech specifically, they seem to generally, while they don't have a lot of visibility right now, suggest that they're going to be able to sort of weather the storm there. I mean, what's your expectation then for the second half as far as some of that guidance is concerned?
Yeah, I'll share some of the headwinds because they're still there, but also a lot of the opportunities that we see in the second half where tech is concerned. On the headwinds front, trade tensions, tariffs, still big issues there. We're also seeing some shifting customer relationships. For example, Qualcomm, it's facing the loss of Apple as a handset customer. And what that highlights for Qualcomm is that it needs really further diversification. But I will add that Qualcomm saw first half growth in automotive, in IoT, and QTC chips. So that's indicating that its diversification away from its core handset business is succeeding. Of course, the China export restrictions affecting companies like NVIDIA. But from a tech perspective, what we're seeing in the second half as opportunities are cloud and edge, so think Snowflake, cybersecurity and data protection, think Palo Alto Networks, CrowdStrike. In the 5G and wireless semiconductor phase, we're looking at Broadcom, Qualcomm, AMD, of course, Marvell, and of course, NVIDIA. And we're following these companies very closely to see how they perform in the second half.
Yeah, no doubt, as you mentioned, some of these companies have a China problem on their hands. NVIDIA has proven to be pretty adaptable, getting around, circumventing some of those export controls. And no doubt, we've also seen the headlines today about the administration cracking down on potentially exports to places like Malaysia and Thailand. They want to sort of plug some of those loopholes where there has been some leakage, I suppose. But this is obviously a space to watch. But as far as some of the earnings are concerned, what are you watching and listening for as to what some of these companies are going to say about not just obviously tariffs and export controls, but the domestic market as well, as far as demand is concerned?
A couple of companies that we're following very closely include two that I just mentioned, CrowdStrike and Palo Alto Networks. Why we're watching CrowdStrike so closely is because it's only been 1 year after it experienced that massive global IT outage that was caused by a faulty software update. What we're seeing for its cybersecurity products is really robust. And that momentum is likely to continue into 2026. And I should also note, CrowdStrike's revenue is tied to its cyber AI products, significantly above where it was a year ago. Palo Alto Networks is also really evolving as the cybersecurity landscape does nothing but evolve into very sophisticated attack surfaces and vectors. But Palo has gone from really a next-gen firewall supplier into what now is a security operating system that spans network and it spans cloud and endpoint and identity. So the AI trade in 2025 is looking really strong. This is probably the biggest technological paradigm shift of our lifetimes that we'll see, and it's still only in the early innings.
Yeah, and I mean, as we've been talking about this morning with a number of my colleagues, is the fact that when it comes to cybersecurity, when you look at the CrowdStrikes of the world, I mean, this is not optional, particularly as we see the rollout of AI. There certainly is that need, and the budgets are there as far as the spend is concerned when you think about IT. But you mentioned the AI trade, and it was interesting. I was talking to another guest earlier today who said that we shouldn't be calling it the AI trade. It's a structural change and shift that we're going through right now. So where do you see where things stand right now?
Well, as I mentioned, this boom represents the biggest paradigm shift that we'll see in our lifetimes. We thought mobile was big, we thought internet was big, and they are. But the thing with AI is it's still in the really early innings of transforming everything. We're talking from how we work, how we communicate, how we travel, how we play. I mean, even how we eat. We're seeing things like humanoid robots, self-driving cars. If you come to San Francisco, which is just up the street from me, you will see Waymos everywhere. There's more complex inference models, but ultimately, the scope and the speed of AI economic transformation, it's only going to accelerate over the second half. I mean, even the talent war we're seeing, escalating competition between those big tech giants hunting for the best and the brightest talent with billions at stake.
Yeah, it's interesting you mentioned that. I just want to pick your brains about where you see this whole CapEx narrative, because at the start of the year, it seemed like that was being brought into question, particularly off the back of the DeepSeek breakthrough, which had rattled everyone from Silicon Valley to Wall Street. And then now it seems like that whole idea is sort of, I don't know, being swept under the rug or something, because, I mean, you're seeing some of these companies coming out with sort of eye-watering announcements as far as, splashing the cash, and it doesn't matter how much.
Yes. That is a really interesting phenomenon that's going on right now, Sam, is that we're seeing companies like Meta and OpenAI really battle for these top talent with Scale AI as well, and Meta, for example. We're seeing a lot of other companies come into the forefront here that are really attractive for investors right now. I'll mention a couple of them from a spending perspective. Nebius. This is an AI infrastructure firm that really popped at about 80% in first half. And why it's positioned to benefit well is because higher server infrastructure spending in IT is going on. So from a cost perspective, IT is doubling down on AI investments. And that's because the breakthroughs in AI keep happening. We're also seeing companies like Cloudflare, I mentioned, the new traffic cop of the internet. Its growth remains robust. It's quietly powering much of the internet. And it's doing things like offering a global edge network with products that span multiple areas like security and content delivery. And of course, NVIDIA, that remains strong from a spending perspective, because at the end of the day, its moat is just getting wider and deeper, and it's simply unmatched from an AI full stack ecosystem perspective, making it one to watch, one to spend on, and one that is going to be difficult for a competitor to get in there and replicate.
And, when we talk about the AI arms race, I mean, who do you think is best positioned right now as far as that's concerned?
I think those in the Magnificent Seven, specifically NVIDIA, for example. I think Meta is as well. We're seeing a lot of momentum there with Alphabet as well. Something else that was interesting about first half is the non-tech stocks in the energy sector being affected by tech, because we're seeing companies like Alphabet, Amazon, Meta, and Microsoft really lean into nuclear energy to power these AI data centers that are super, super power hungry. But we also see some of the smaller players, like I mentioned, the Nebiuses, the CoreWeaves, also, for example, the Cloudflares, also being really active in this space and having a tremendous amount of momentum and spending opportunities that they're bringing into second half.
I suppose it's hard to pinpoint when you've got such a huge ecosystem and some of the secondary effects, as you mentioned. I mean, someone's got to power all of it, and nuclear obviously has the reliable base load there, so it's a no-brainer as to why some of these companies have been teaming up with some of the energy companies as well. So, yeah, I mean, hopefully it will start to see some breadth there as well as it starts to broaden out too. It's been an absolute pleasure speaking with you today, Lisa. Thank you so much for your time, your analysis and insights. Lisa Martin there, research analyst at the Futurum Group, for joining the show. All right, well, still ahead, we will examine the current volatility levels in the market as the tariff deadline approaches and how you can use options strategies to mitigate some of that risk. The watch list will be right back.
Estrategias de opciones, ¿no? Bueno. Las opciones son un producto financiero que también se puede comerciar. Así como comprar las acciones, literal es lo mismo, pero En las opciones es un contrato en el que pactas una fecha para liquidar esa operación y si el precio alcanza el objetivo en esa fecha, haces dinero, pero si no, lo pierdes. Entonces, es complejo. Nada como tener la cuenta de efectivo, comprar y vender y te vas levantando poco a poco. Estoy calculando ahorita, fueron 81.55 acciones a 4.92. Va. Y eso fue la compra, ahora la venta. Luego fueron 381, 74.78 a 5.09. Ok. 18 centavos. 10. Ok. Listo. Ahora tengo que checar lo de Interactive Brokers porque lo tengo atorado también eso. Vamos a poner el login. Ya la computadora siento que se estabilizó porque ahí marca 2, 4, 6, 8, 10, 11 aplicaciones abiertas. Y ya no se me está trabando, eso es bueno. Entonces, porque es horrible que uno se le esté trabando la máquina. Y más ahorita que uno está comprando y vendiendo. O sea, ya vendí todo lo que tenía. O sea, ya no tengo nada prácticamente. Y ya son 12:30. O sea, el día hoy se fue volando. O sea, no puedo creerlo. O sea, no puedo creer que a las 7:30 estaba en chinga. O sea, estaba en alerta máxima, literal. Me sentí en alerta máxima. Y ahorita ya estamos así. Y hoy marca que va a llover porque quiero salir a correr. Marca que va a llover a la 1, a las 2, a las 3, a las 3, 4. Ok. Y va a ser frío. Va. ¿Cachó? ¿Qué pasó? ¿Qué pasó, bebé? ¿Qué pasó, nene? ¿No? Sí, no. A ver, esperen.
We're wondering where it was going to go and who was going to get them and what they were actually going to say.
Well, I look at this as a little bit of payback from last week, Sam. So what happened last week? We had a short trading week, only open 3.5 days, Monday, Tuesday, Wednesday, part of the day, Thursday. Markets were up most of the day. For the Russell 2000 especially broke out, the Dow Industrials broke out, and we saw volatility retreat as we normally do in front of a holiday. So what ends up happening is when we come back to work like today on the 7th, we're going to pay it back with higher volatility and a little bit more selling because a lot of people were trying to buy stocks heavily into the holiday, reduce volatility and so forth. So some of that selling is happening today and may overflow into the next couple of days as well too.
Okay, so some of it perhaps justified today, and you know we are looking down the barrel of a pretty quiet old week, you could say, on the earnings front, on the economic data front. No doubt we're going to be hearing a lot of sort of noise as far as tariffs are concerned, particularly around that July 9th deadline, which has now been pushed out. So what are you watching? What's your sort of outlook now for where we go from here?
So I'm watching some levels in the markets right now, Sam. I'm looking at about 6,100 on the S&P 500, maybe even down to 6,000, which is a round number. NASDAQ down to about 22,000. If we get down to there, it probably would be a good spot to start dipping your toe in and adding some exposure. I think right now, though, as we ended last week, oscillators which is what I follow as one of my momentum indicators, very overbought. And you don't really want to be careful. It was really flashing a red flag on Thursday as of the close. So I think buying into this market right now is a little bit dangerous right here. You want to wait for a little bit of a pullback to let the dip buyers step in there and add some exposure.
Okay, well, what do you do then? I mean, do you just sort of sit on the sidelines? Or?
So what I'll do is if I have some long positions, I'm adding some puts. I'm adding some short-term puts, because even with the VIX at 18% right now, protection is still really inexpensive. Now remember something, when volatility is down, it means option prices are cheap. And it doesn't mean just put options, call options are cheaper as well too, because not many people are expecting large moves up or down the markets. Now, today has mostly just been a one-sided move to the downside. We started opening down and we rallied back a little bit, but again, as you said, we've lost a lot of ground all day long today. Yeah. Only down 1.5%, right? But I mean, it's a quiet 1.5%. Nobody's screaming and threatening to jump out the window on a day like today, which is interesting because we've had days like this in the past where people started to get really concerned and nervous and worried and fearful, but we're not having that today.
I suppose the markets have sort of got used to some of the uncertainty, particularly around the tariff headline risk as well. Right. I mean, you talk about, seeing a mild correction typically before earnings season, that being around the corner. Yes. As we look at the next sort of catalyst now in the market, many do say it will be the next earnings season, particularly if we see continued strength there. Do you believe that will be the case?
I think so in certain groups, certain sectors. I think next week we will start hearing from the banks, the financials. We'll hear from JP Morgan, Goldman Sachs, Morgan Stanley, Bank of America, and a few others. I think that those names are going to hold up pretty well. I think they're going to produce some really strong earnings, and they're going to talk about some good growth coming over the next 2 or 3 quarters. I think there's some other sectors, though, however, that are a little bit overdone, and I'm looking at technology right now. I'm looking at NVIDIA. I'm looking at, although NVIDIA doesn't report their earnings until August, I think some of these names have gotten a little bit over their skis right now, and I think that's a ripe area for them, for investors to start taking some profits. You see some good numbers from Microsoft or from Meta or from Apple, and people are going to use that as an excuse to start taking some risk down off the table.
Okay, so I mean, how are you looking for some of that protection and sort of diversification? Where are you sort of casting the net?
So I'm looking at the SPY as the SP 500 ETF and the QQQ, which is the NASDAQ ETF, as a way of buying some protection. And I'm looking out about 3 weeks to 3 months. I'm looking out anywhere from the end of July all the way out to October and buying some protection. I'm buying some at-the-money puts, and even though they seem like they're very expensive, when in reality, as volatility is starting to rise, those instruments are getting an increase in value every single day. So last week, as the market closed on Thursday, before the holiday, I did buy some puts. They were somewhat expensive, but you know what? I bought some puts that expire at the end of this week. I will be rolling them later on this week. I got to have some keeping protection on until we get a situation where the market gets somewhat oversold. We got super overbought last week. I can't emphasize that enough, Sam. Super overbought last week on Thursday as the market closed, and which tells us that a lot of investors are in. Now, what happens if there's no more money coming into the markets? All there's left is what? Sellers. So if we have some sellers coming into the market, it's going to take the market down quite a bit.
Okay, so you've spoken a lot about sort of protection, how to sort of diversify the portfolio, your approach to the markets right now. I do want to get some of your stock ideas, what's on your radar. But first and foremost, I mean, we've talked about the next catalyst potentially being, obviously the earnings, and you mentioned the banks. But, with regards to all the other headlines that we got out over the weekend, I mean, who are you listening to right now, as far as Fed Chair Powell or Trump?
Yeah, so if I had to choose one or the other, I mean, each one has their own catalyst for moving the markets. I think when President Trump comes out there and starts talking about tariffs, people are taking it seriously, although not as seriously as they did from back in the early part of April when the VIX skyrocketed from about 16% all the way up to 60%. Now today, you get a day like today where he's talking about tariffs with Japan and so forth. The VIX is up a little bit. It's not skying high, out of control. Jay Powell, on the other hand, he's got a real steady hand managing monetary policy, and I like what he's doing. I like what he's saying, even though President Trump doesn't like what he's doing with interest rates. But keeping a steady hand, paying attention to what inflation is doing, paying attention to what the growth market in the economy is doing. Job market was really strong last week. It's remaining strong. And why do they need to cut interest rates right now when the economy is strong and inflation is starting to come down? So I think that listening to them both, you can get some good clues on what to do.
Okay, and then there's the whole other sort of dynamic of the taco trade. I think a HSBC analyst said too many tacos gives the market indigestion. So
isn't it interesting that where the taco acronym came from was right here?
Right.
Came from right here, from Wall Street. So it's, too many. I like that. Too many tacos gives you too much interest. But of course, tomorrow we've got Taco Tuesday, right? So
Oh, there you go.
It could
exactly,
be
just in time. Talk us through some of the stocks on your radar and why.
Well, some of the things I like, some names I like. So I really do like Meta here, and even though it's come back quite a bit, I do like them coming into the quarter. I think they're going to post some really strong numbers. I do like Microsoft, but it is a little bit frothy right here. And one of the names that I'm really favoring here, Sam, is Chime, which is a recent IPO. CHYM is the symbol, and they're in financial applications services, much like a name like SoFi and PayPal. They do compete with the banks, but I think this is a name that's going to do extremely well over the next several months. It's a new recent IPO, much like CoreWeave and Circle, which obviously those two names have gone crazy over the past 3 months. And I don't think Chime's going to do that, but I do think it's got some upside.
Okay, so you mentioned Meta and Microsoft. I was just having a fascinating conversation just before we came to you about the whole AI trade, and some say maybe it shouldn't be called that. It's just a real structural shift that we're seeing. I mean, how are you sort of watching that broadly speaking?
Well, I was just talking with somebody earlier today talking about NVIDIA. If AI was a planet, NVIDIA is the core of that planet, and so it's touching just about every technology company that's related to AI. Anything, it all comes back to NVIDIA, right? So I think that some of these names have gone off and drifted way too high in a certain aspect. CoreWeave is one of them, but you pull back the onion a little bit on a name like Marvell or a name like Broadcom, and these companies certainly are taking this AI initiative very seriously, and they have some growth there. And the last couple of earnings reports that they both posted were super strong, and they said, strong revenues as far as the eye can see. You got to take them for their word at this right now, and I think that some of these companies are still rather cheap, even though they've gone up quite significantly over the past 6-7 months.
Yeah, and I suppose the narrative very much has been show us proof of all that spend now, and I think we are starting to see the productivity and efficiency benefits coming through, particularly in the labour market, which we're going to be talking about later in the show. It's been an absolute pleasure to have you here. Thank you so much for joining us. Hopefully the AI doesn't replace our jobs too soon, so let's do it again.
15 minutos.
All right.
15 minutos y ahorita ya me desconecto.
That was Bob Lang, who's the President and Chief Option Strategist at Explosive Options. Still ahead, we will bring in our panel to discuss, as I mentioned, the state of the labour market following last week's employment data. That's next on the watch list here.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh. Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties.
Carl.
Schwab. Schwab, a modern approach to wealth management.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren, planning for their college educations. Someday it'll be their turn.
Ese tipo de música como de piano, como cuando terminan los anuncios, me recuerda a mi infancia. Mucho tiempo estuve escuchando ese tipo de anuncios, no recuerdo por qué. Y es como, wow, ahora tengo 27 años y digo, ¿qué pedo? A ver, es lunes y está muy movido. O sea, tengo mucho trabajo, aunque ya casi registro todos los movimientos del día de hoy. ¿Qué más tengo? ¿Qué más tengo? Help. Vamos a ponerle help. Vamos a ponerle help. Ajá. Ok. Visit our welcome center for Indian training management. Lecture guides, release notes, email, phone support. Awesome. I need phone support. Awesome. In my Magic Mexico. There is no Magic Mexico. Fuck. Okay. We need to call United States. Fuck. Okay. Lo que uno hace por 10,000 pesos. Bueno, 10,000 pesos que al rato pueden ser 40, 50,000, lo que sea, ¿no? Pero ahí está. Toma, ya se está cayendo. Taxi with government health authority to advance national integrated of FDA cleared Art 100 system and establish global distribution framework. Ok, pero pues ya pasó el hype, o sea, ya pasó el hype. Wolf, ¿cómo sigue Wolf? De Woo. Ah, chale, lo perdí. Wolf. Listo, a ver, ya tengo el teléfono. Ahora... pues creo que por ahora será así, pero... ok, a ver. MR, done. Y necesito el de Hub. Es este, necesito ir a la cartera de Hub para saber cuántos intradías quedan. Porque es un rollo lo de los intradías, ¿saben? O sea, tienen 3 cada 5 días hábiles, por ley. Si en uno estuviera, pues hace intradía todo el día, ¿no? Porque... Esperen. pasó? Ah, ok, es que sí es cierto, no se había vendido. ¿O sí? ¿Y de day trades cuántos quedan? Gits fue el primero. Ah, claro, sí, cierto, cierto, cierto. Ok, quedan dos. Entonces mañana sí o sí nos vamos a subir al barco. Entonces tengo que tener la liquidez lista. A veces también lo que hago es llegar y comprar 107. ¿En cuánto está Bitmain? Aquí está. Está en 112, ok. Porque aquí ya tiene ganancia de $6. Chido. Este, pero necesito liquidez. Entonces, a ver, vamos a ir aquí, porque ya son 5 para la 1 y mi reunión empieza en 20 minutos, pero me tengo que ir 10 antes. Vamos a ponerle el máximo, vender, listo. Vámonos para acá. Y vamos a ponerle, sí, ABGO también ya para que se vaya. El máximo, vender, modificar, 75 entonces. Órale pues, Nicia. Listo. Luego, Merc, Gits. Gits también, sí es cierto. Gin. Pero más que nada, en BMNR está su liquidez. Ok. A ver. Sí, porque le había comprado Merck, pero tiene 0.07 de pérdida y necesito liquidez. Entonces, o más bien, se necesita liquidez en esta cuenta. Entonces, ya teniendo $65 disponibles, con eso ya, para mañana. Ok, listo. Liquidez lista y hub. Done. Min, espera. Ok, va. Sí, claro, hay que esperar. Ok, listo. Ahora tengo que ver lo de Interactive Brokers, pero por eso tengo que llamar a Estados Unidos. 1, 2, 3, 4, 5, 6, 7. Listo. Y la aplicación, ok. Los vamos a cerrarla mientras. Va. Noticias nuevas de ahorita. A ver, tenemos una de WKSP. WKSP. Worksport achieves 50% production. O sea, amaneciste en 3.40 y estás en 4.3. Ok. Proyectan 20 millones de ganancia. Ok, interesante. Es una buena noticia, sí, claro. Vean. De 2 a 4 ya es el 45% porque tiene 73 centavos. Claro, estamos hablando de haberla comprado el 1 de julio, el martes pasado. Interesante. Nada más. Todas las demás son viejitas. Ya caducaron esas noticias. El mercado ahora sí cierra en 1 hora. No tenemos mucho en sí. Vamos a ver los índices. Mira, estaba leyendo la noticia de Mustang Bio de por qué estaba creciendo tanto. Y vean, 1.68 el Russell. El Russell es el que está sufriendo más. Ok, va. Vamos a AI Weekly. Y vamos a ponerle mercados a la baja, principalmente para el Russell 2000, con un menos 1.68%, 2.211.20 puntos. Ok. Ok. Luego de la subida agresiva que tuvimos hacia máximos históricos, una regresión, una baja regresiva no le hace daño a nadie. Punto. Indicador de codicia. Indicador de codicia. Vamos a ver nuestra codicia. ¿Ya llegó? Todavía no. ¿Qué? ¿Qué? ¿No era en agosto? 75, 75. A ver. De 78 a 75. Sí, en efecto, puede que pase una corrección. Entonces, o sea, no lo dudo. Con lo de solo necesitamos cualquier cosa más en tema político o geopolítico, y con eso tenemos para que ya el mercado por fin ¿cómo se llama? A ver, esperen. Subscription, ¿cuándo? 6 de agosto. Gracias por avisarme. 1290, no puede ser. Tengo demasiados correos. Sí, es cierto. Se me olvidó. Vamos a ver esto.
Taxi unveil, the autonomy push, all things that do still very much excite me about their long-term trajectory and narrative. But you have to consider Musk right now doesn't seem to want to stray away as much as we were thinking he would from politics after he, of course, left his role at the Department of Doge, as we want to put it. So I think that this is unfortunate because it does bring this drag down on shares where nothing fundamentally has changed from last week. Just commentary over the weekend really is, I think, the leading contributor to the weakness today.
And we did see another downgrade from them as well. I think a lot of investors are hoping that Musk is going to focus on the company as a tech company, not just a car company. And he even said so himself. He gave a whole press conference about how I'm going to focus back on the company, and now we're back into politics, and now William Blair has downgraded them.
Yeah, and this is also an interesting note because it mentions, I think, a critical part of the Big Beautiful Bill, which was the beginning of course, his backlash between Musk and President Trump. But the removal, William Blair did mention, of that $7,500 electric vehicle tax credit right now really also drags the elimination of the corporate average fuel economy, which they says requires a reset in expectations in their opinion. So they do believe the combination of a demand headwind from the tax credit removal and Tesla's over $2 billion in profits from regulatory credits being at risk may be too much for investors to bear. And as a result, they do expect now this reduction in regulatory credit revenue to result in a direct hit to profitability, which I think is also partially why he's been so critical of the Big Beautiful Bill, because it's not favorable for anything that operates in alternative energy.
And we had other things today. AI, big AI news out of CoreWeave, saying they're acquiring Core Scientific, and both of their stocks sank after that announcement. Can you give us the details?
Pretty significantly. So CoreWeave shares falling, as well as Core Scientific, after the company CoreWeave did say it would be buying that supplier and key partner being Core Scientific. Both companies do rent out various AI servers in the cloud, and they have really seen their strength begin in both of these companies as a result of cryptocurrency mining. But CoreWeave leases data center space from Core Scientific and did try to acquire the company just last year. So Core Scientific stockholders will now receive roughly 0.12 of these newly issued shares of CoreWeave for each share of Core Scientific they hold. The exchange ratio implies a total equity value of just around $9 billion and represents a value of around $20.40 a share based on the closing price that was around $165 back on July 3rd. So the Street reported that talks were taking place between the two companies last month, which is sort of why we poll from July 3rd, because that was the last time we saw a normal trading session without this news. But the deal will add around 1.3 gigawatts of gross power to CoreWeave's data center portfolio, with an additional 1 gigawatt of power available for expansion. I think further consolidation in this space might be seen as we do see all of these companies try to scramble to expand their energy capacity. And as we know, the grid as it stands right now in the U.S. must be expanded if we're going to see the expected energy output from all of these AI data centers that are being built, which I do think the energy part of this story has been interesting. But right now, CoreWeave, with right now seeing a historical really dedication to cryptocurrency, I like that they're expanding beyond that. And I think that this deal, while we're not seeing it reflected in share price today, is lucrative for the company that's trying to build as quickly as it is.
Yeah, they only took a 3.75% hit on this news, but Core Scientific down almost 17.5%. Right now on the news. I think important to note, though, for them, they are up about 50% since the Journal first broke that this deal was in the works in late June. So it's not quite as dire as it looks, but definitely wasn't probably received, I think, the way that either company hoped that it might be.
I would say that for CoreWeave, a 4% move to the downside, less than that now, is actually kind of a win here comparatively, because even Core Scientific was down, like you said, 17% as it stands. I saw things down, well over 20% earlier. So the fact even that we've eased off of those lows, well, the market hasn't, is encouraging that a lot of times with these various M&As, it's not abnormal to see some selling or some volatility following the announcements.
And we have to talk about Netflix, too. They had a downgrade from Seaport earlier today, cited some valuation issues, potential issues.
Another name that's actually come off of lows here quite considerably on this session. We've still remained off of highs by about 3.8% with also today's move, but off of lows by 120%. Yeah. So a pretty substantial recovery here we've seen in real time in Netflix. Seaport, though, not with so much optimism, just taking on a more neutral stance with a downgrade to neutral from buy, no price target, citing valuation and the time needed to execute against expectations for this downgrade. But they now say they see less than 10% upside for sure.
Una noticia muy importante, Bitmain, mañana a lo mejor pase, en la que ya tienen listos los preparativos de Ethereum. Es decir, que ya los están holdeando, esperan como lo de siempre. O sea, vamos a tener más, estamos planeando esto. Y pues obviamente que impulse el precio de Ethereum. O sea, tal vez Ethereum pueda llegar hasta los 60,000 pesos mexicanos o a los 70,000. Cuando su máximo histórico hace 2, 3 años, creo que el año pasado fue en el rally, fue de 80,000 pesos un Ethereum. Pues está por verse. Hoy fue bastante bueno. O sea, con ASST y Pentos, o sea, esos son los trades del día, básicamente. Así que los voy a dejar aquí, muchachos, porque ya casi empieza mi reunión. Sí, ya casi en 10 minutos. Entonces, los dejo aquí. Mañana procuraré conectarme más temprano porque en la mañana es en chinga, o sea, estar en putiza. Hay que escribir, hay que hacer. Ahí está mi reunión.